does seem like the economic cycle is moving at warp speed.
Some central banks are trying to push back against this market view of where rates are going.
The market has repriced the hiking cycle significantly.
Market's been very quick to price out interest rate hikes by the Fed in the middle of next year.
We don't think that they'll actually be raising rates until 2023.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Coming into Wednesday with another all-time high from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market slightly negative, down 5 on the S&P. We're down 1/10%. TK, big tech doing what big tech does.
Big tech
knocking
delivered.
It out of the park.
Absolutely, John. I was sitting there last night with a beverage of my choice, and I said, the first thing I'm going to do when I come in the morning is look at the Bloomberg analysis out. We're not going to dive into this now and slow down the show to Rebecca Patterson. But, John, the year-end 2022 of big tech is $1.404 trillion in revenue. Where is digital's place in America's future? It's ginormous.
The takeaway from Microsoft, Tom, this line from Satya Nadella: digital technology is a deflationary force in an inflationary economy. What do you make of that?
I missed that. We can talk to Rebecca about that. This is incredibly true and cuts that way as a deflationary impulse and the technological change. John, they got 31% EBITDA margins out to the end of next year. Everyone raising their price targets. Jeffrey's up big on one of them. I think Google, Piper Jaffray went up as well. John, It is a shift yesterday afternoon in how we perceive pandemic digital.
Lisa, price target raises at Jefferies, Barclays, BMO, on Alphabet. People have framed Alphabet as some kind of a disappointment. The stock's up 50-60% year to date.
And revenue almost doubled. Just to really drive the point home here, people are disappointed because of the cloud revenue coming in lower than expected. The idea of whether they're actually competing against Azure and AWS in the same kind of way that people had expected. But these were blockbuster earnings. My issue is what's being priced in already, and how much does this hinge, frankly, to what you were saying earlier, which is the rate hiking cycle and where we are in terms of benchmark rates.
We've got to spend a little bit of time talking about Washington as well. Any takers? Who wants to explain the billionaire tax here? Tom, would you like to go first?
I'll go first. Greg Valliere, always good, but today, John, exceptionally strong in a scathing note, part of it on the billionaire's tax. And what is so important, as we centered on with Anne-Marie Horton yesterday, is what is the chairman of the House Ways and Means Committee going to do? Congressman Neal of Western Massachusetts is, quote, furious over a vague agreement in principle wrapped around going after 10, 20, 40 people.
Tom, I saw someone say the tax base is now 700 people and 200 companies. That's the tax base now. 700 people, 200
it's
companies.
Original. Seriously, what's the constitutionality of it? I'm not qualified to answer that. Lisa Abramowicz is.
No, I will say that is the issue, right? That will this be held up in a conservative court? That's why I'm focused on the minimum corporate tax rate that really started percolating yesterday as well.
We'll head to D.C., Lisa, in about 20 minutes. No doubt you've got a lot of questions, like a lot of other people. Equity futures down 5 on the S&P, negative about 0.1%. Equities just a little softer after another all-time high. In the bond market, yields come in a basis point on 10s to 159.39. Look out twos, TK. Your 2-year was at 50 basis points briefly a little bit earlier.
Oh, it's curve flattening. The 2-10 spread, the difference between the 10-year yield and the 2-year yield, 110 basis points. This is now getting to be germane to the debate. John, 120 to 118 is not a big deal. 120 down to 110 basis points gets my attention.
Lisa, 2-year yields higher, 30-year yields a little bit lower.
This, to me, is the story of the day, of the week, of the year. What do central banks do with respect to the higher inflation rates, regardless of whether they actually can control them, but if they're due to supply chain constraints? We'll get a taste of this from the Bank of Canada today at 10 a.m. when they have their rate decision. The expectation is for them to remain pat. However, they are expected to curtail their monthly bond purchases quite substantially, their weekly bond purchases, as they have done 4 other times so far over the year. Here's the question, though. How does Canada, how does the Federal Reserve, how does the ECB, which will come out tomorrow, how will they all respond to inflationary pressures that are out of their control, that rely on supply chains and labor disruptions that, frankly, will just take time and other efforts to work through? Today, we also get earnings from General Motors. And for the key question to me is, how do they compete with Tesla, especially after with what we just saw, as well as, of course, the idea of how they deal with supply chain constraints, how they deal with some of these component shortages shortages that have really delayed production. Tesla shares up over the past 2 years, a mere 1,451%. These aren't even percentage points anymore, even though General Motors and Ford have done really well. We're going to be hearing from General Motors CEO Mary Barra coming up later today, 8:45 a.m. Don't miss that. And at 1 p.m., Tom, I'm doing this for you, 5-year U.S. Treasury auction following yesterday's 2-year auction, which confirmed the idea of rate hikes coming potentially sooner than Fed officials expected. The idea here that the 2-year yield is now pricing in 2 rate hikes in the next 2 years.
The only thing constructive about 1 p.m. this afternoon is I'll be deep into the surveillance nap.
I'll be long gone too, Tom.
Yeah, thank you.
And then Lisa will bring you the balance sheet tomorrow.
What a preview of this auction. I'll be sleeping.
Lisa, thank you.
Anytime.
Joining us now, I'm pleased to say, Rebecca Patterson, Director of Investment Research over at Bridgewater. Rebecca, great to have you on the program. We're lucky to have you with us to start the program this morning. Let's start right there. How quickly we've repriced the front end of the yield curve. What's that telling you, Rebecca?
Well, I think Chairman Powell probably helped move the needle a little bit here in his comments on October 22nd, when he continued to say inflation would be transitory, but in a slight change of tone, acknowledged that we now have upside risks. And hard not to acknowledge that we have upside risks when you look at things from not enough housing to meet demand, not enough labor to meet demand, not enough ships, not enough trucks. So there's plenty of pressures out there. I think the big one, though, is going to be wages.
Rebecca, days long and go, and I understand the wage issue, but you were so good at pinning together all the dynamics of the market funneled through foreign exchange and dollar dynamics. What is the dynamics now wrapped around the Fed talk? What's the dynamics now you're studying every morning at Bridgewater?
So we think that this really was a demand shock more than a supply shock. This started because we had extraordinary fiscal and monetary easing, and that led to a surge in demand. And we see that every day now, whether it's high savings rates coming down, but still very elevated, record net wealth in America, incredibly strong balance sheets, both for consumers and companies, and a lot of spending. And so the supply is there in a lot of categories. It can't keep up with demand. We have more ships than ever on the ocean. Ports are processing more imports than ever in the United States. It's just that the demand is that strong. And so now supply can't keep up, and the release valve, if you will, is going to be higher wages, higher inflation. And what we're seeing in earnings season is that so far most companies can pass that on.
All right. So have we yet seen peak margin pressures, Rebecca?
I do think we need to be careful looking at margins going ahead. But again, what we're seeing so far from the earnings season is that there are a few companies pulling down guidance slightly because of the supply chain issues, but we're continuing to see very strong margin growth. I do worry as we look ahead and we start seeing the Fed pull back, right? We now have 2 hikes priced in for the second half of next year, that you're going to get this withdrawal of liquidity, starting with the taper probably at the end of this year and then going into rate hikes. The U.S. equity market has become substantially more sensitive to liquidity conditions. When we measure it, we now have about 40% of U.S. companies vulnerable to a withdrawal of liquidity. That's going to be primarily the companies with longer cash flows, longer duration, so technology in particular. And given the weight of technology, just the sector weight, that's something that we're keeping an eye on, a bit more cautiously, not bearish. We're still constructive on the U.S. market, but we think that what has been a huge tailwind is slowly starting to turn into a headwind.
Your view is different from most people that come on this program, Rebecca. I don't want to let that slide. You call this a demand shock. A lot of other people call it a supply side story. When they come on, they give their view on markets too. I want to understand your view on this is different in the sense that you say it's a demand shock. How is your investment thesis different, if at all?
Well, we started out the show talking about the Fed, right? And what are central banks going to do in general? And when we saw this demand shock, we thought, okay, we have this backdrop that's going to allow for a lot of spending. Companies aren't going to be able to keep up. They're going to have to raise wages to bring labor in, to get the inputs in. So how is that going to play out? It's either going to be higher inflation for longer than what's priced in, or it's going to be a Fed that has to catch up versus what's discounted for Fed fund rates. So we've been positioning our portfolio for both assets that would benefit from higher inflation. And, oops, that was interesting. That was me not moving enough. The lights just went out in here.
The lighting's still good. The lighting is still good. Keep going, Rebecca.
As long as I look good, that's fine.
That's very important.
So anyway, the point is that we've been positioned both for higher inflation and for higher yields in our portfolio, and thinking about what do higher yields mean for other assets. Tom, to your point, be it the dollar, and we are constructive on the dollar for now against certain currencies, or for equities. Which equities are going to be more vulnerable to higher rates? Which companies will benefit from higher rates? So something like financials, great earnings. Part of that is that yield curve, which today is going against them a little. And then the companies more vulnerable to that liquidity withdrawal, like we said, technology would be an area we keep an eye on.
Rebecca, thank you. It's good mood lighting for this time of the morning.
Absolutely.
It works.
That's just Dalio cost control, right?
Yeah, I'm sure.
They're cutting costs of Bridgewater.
It's our sustainability effort. Come on.
Of course. Rebecca, thank you. Fantastic as always. Rebecca Patterson there of Bridgewater. Tom, just a sense of how they're thinking about the world at the moment within Bridgewater and how it's slightly nuanced compared to, say, a lot of people on the street who would call this primarily a supply-side shock.
Yeah, let's be clear. Ray Dalio is a piñata on this. I mean, he's a magnet for criticism and the big view and all that. But the company generates, John, really interesting and controversial views wrapped around original interest rate parity strategy and now taking in Rebecca with her history from J.P. Morgan and from Bessemer Trust. It's a much more holistic, broader view. What I love there, that comment, John, this is a demand shock, that is controversial.
A positive demand shock at the start of this year, Tom, going into a supply-constrained economy. And because of that, Lisa, this is why people go full circle back to the decision made by this administration to really juice this economy as it reopened.
Which is the reason, this is one of the reasons why inflation is such a hot topic, because people are saying it's because of some of the fiscal policies earlier in the year that we're seeing some of the inflationary pressures that are crimping certain Americans.
We got to head down to D.C. AMH tells me that billionaire tax is 107 pages long. You've been reading it, Tom?
I'm into it right now. Seriously,
pages.
I'm reading it right now.
Sure you are. Down 3 on the S&P.
Oh, they misspelled Bezos.
Negative 0.1% from New York City. This
they
is
spelled
Bloomberg.
Musk correctly.
With the First Word News, I'm Laura Wright. On Capitol Hill, Democrats have unveiled 2 new taxes they hope would help pay for President Biden's social spending package. One would target billionaires' assets of those who earned at least $100 million a year for 3 years in a row. The other is a minimum tax for corporations. It would require that companies that report more than $1 billion in profits to pay at least a 15% tax rate, even if they qualify for lots of tax breaks. China has slammed U.S. efforts to boost Taiwan's participation in United Nations organizations. Beijing says the self-ruled island has no right to join the UN a half-century after it was kicked out. Secretary of State Antony Blinken has called on other countries to join the U.S. in pushing to give Taiwan a greater role at the UN. It's another blockbuster deal involving Hertz and Tesla. Uber drivers in the U.S. will be able to offer services with Tesla electric vehicles rented from Hertz starting next week. Hertz will supply up to 50,000 Teslas to drivers for the ride-hailing giant by 2023. Earlier this week, Hertz ordered 100,000 cars from Tesla. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We know that we are close to a deal being signed.
We are united behind this legislation, and I want to make it very clear. When you're united, it doesn't necessarily mean that you're unanimous.
We're on the precipice of something really extraordinary that is going to transform the lives of working people in this country.
Representatives Joyce Beatty there of Ohio, Jim Clyburn of South Carolina, and David Cicilline of Rhode Island. From New York City this morning, good morning. Tom Keene, Lisa Abramowicz and Jonathan Ferro. Your equity market, -2. We're down 0.05% and pulling back from all-time highs by a whisker. In the bond market, yields in a basis point on 10s to 159.39. It's the front end that gets your attention. The front end of the yield curve. Yeah. This move is building towards 50 basis points this morning. Very briefly through that level, up 2 basis points right now to 49. 1 week from now, you will hear from the Federal Reserve Chair, Jay Powell, after that news conference and decision with the Federal Reserve. What we've heard so far from the Senate Finance Committee Chair, Tom, is the following. There are 2 tax codes in America. The first is mandatory for workers who pay taxes out of every paycheck. The second is voluntary for billionaires who defer paying taxes for years, if not indefinitely.
It is. And I mean, this is the debate right now, and a lot of people saying there has to be change here, but is this the way you do it? Let's bring up one of the subsections of 107 pages here. I picked this out very quickly. It's page 4, so it's at the top of a document in process as well. I'm not even going to read it to you. On radio, it's real simple. Subtitle A, elimination of blah, 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 holding period. For purposes of this title, any taxable event described in subsection B1 with respect to any tradable covered asset shall not be taken into account in determining the holding period. That, and, I talked to your accountant. Joining us now, she does have an accountant, Anne-Marie Horton, Bloomberg Washington correspondent. Are the 107 pages is printed, Anne-Marie, anywhere close to what we'll see?
It's a great question. There's still a lot of concerns, even within the own party, on whether or not they can actually push this billionaires tax through. First, you have the House Ways and Means Committee, which already says we had a plan that the public liked, that had wide support. But of course, there was a holdout in the Senate, Kyrsten Sinema. We don't know what she thinks about the billionaires tax just yet. We do know that she's on board for that 15% minimum corporate tax. So really 2 big tax details coming out of the Capitol yesterday. When you look at the billionaires tax, though, the other big roadblock potentially is does this pass the 16th Amendment? Will this muster up in court, or will they say this is unconstitutional? This is a brand new way of looking at taxation and wealth in this country.
I think this is really, really important, Anne-Marie, because what it finally reveals are the numbers behind political slogans. When you hear a lot of people say things like tax the rich, that people need to pay their fair share, what it actually comes down to is 700 people and 200 companies. Now, Anne-Marie, you never hear that on a campaign trail. What you often hear is very highly divisive language about there are a group of people that don't do their part for society, there are others that carry the burden. That doesn't match who actually pays ordinary income taxes in the United States of America, a highly progressive tax code for ordinary income taxes. And what it finally reveals, and I'll repeat it, Anne-Marie, that the numbers behind the political slogans of the last several years, including that white dress with tax the rich, it's 700 people, it's 200 companies. Anne-Marie, that's quite revealing.
It is quite revealing. This is a small subset of the American population when you look at it like that. Although Senator Elizabeth Warren said yesterday, I think her graduating class was more than the billionaires that they would be able to tax through this. But we should try to explain what this tax would actually be. Reading through the 107 pages, it'd be quite confusing. What this actually would do is that, say you bought a stock and you paid $5 billion in all that stock you bought, and today it's worth, say, $30 billion. You would have to pay taxes on that $25 billion, that gain, that wealth appreciation at a 23.8-something% rate. It's nearly $6 billion that would be going into the system, and they'd give you about 5 years to do that. So for someone like Tom Keene, that would probably mean a little bit less Hermes bow ties or Bottega Veneta wallets. But this is potentially a way that they are trying to scramble to get the money to push through this massive social safety net, through reconciliation for Medicare, climate initiatives, and a number and host of issues.
Anne-Marie, a lot of people are sort of discounting the billionaires tax as something that is really questionably going to pass or not through the Supreme Court, considering the composition there. That's why people's focus really has been more on the 15% minimum corporate tax that would tax actually revenues. It is a different method of taxation to try to capture, frankly, the big tech giants in particular. Can you give us a sense of how realistic this is of passing and how much bipartisan support it may have?
this definitely has more momentum towards it. When we had got the details of this yesterday, last night, we heard from Kirsten Sinema on Twitter giving it her blessing that this is the right, quote, common sense approach is what she called it in terms of how to tax corporations. Remember, she was one of those holdouts that didn't want to increase the corporate tax rate. So this 15% minimum tax would be for what Elizabeth Warren calls the Amazons of the world, companies who make billions of dollars in profits. This is the profits they report to shareholders. That would get a 15% minimum tax, regardless if they were supposed to have any sort of loophole to try to offset those taxes. It is black and white. You pay 15% on that profit you report to shareholders. And this has wide support at the moment. The problem is this would bring in about, roughly, experts say, $400 billion. We're talking about, at the minimum, a $1.5 trillion package.
Anne-Marie, just before you run, what's next in D.C. today?
It's going to be a lot of talk about taxes. We only got the details of this billionaire's tax at 5 a.m. So I'm waiting to hear of what the House Ways and Means says now that they actually see the text. So it's going to be a scramble because, of course, remember, the president leaves tomorrow to go to Rome for the G20. And then following on that, he'll go to the climate conference in Scotland, and they wanted to get a framework in the very least before he was wheels up. The problem, though, is some of them want a vote as well, but we already heard from the progressives, without a vote on both of these packages, they will not support hard infrastructure. So it looks like the president's going to Europe empty-handed.
AMH, we've got some work to do. Down in D.C., our Washington correspondent, thank you very much. Lisa, you mentioned the tech firms. The team at Yahoo Finance last night out on Twitter pointing out that Alphabet and Microsoft, between them, more than $200 billion in cash sitting on the balance sheet still.
So this is part of the dilemma, right? We talk about fair share and what gets taxed. And the issue with some of these big tech giants is that the way that they compose their revenues and where they have their streams of cash just hasn't necessarily cohered with the way that the tax law has written. So the question is, do you change the overall benchmark rate, or do you just try to find new ways of enforcing it so they actually collect something near there, particularly of these cash-rich companies?
Tom, would you believe it, to think that that corporate tax, that cut by the former president, could survive this administration is pretty unthinkable, maybe 9 months ago.
Yeah, Lisa brought this up yesterday, and I think that's the heart of the matter. But, John, what this is a symbolism to all of every political persuasion of almost a Band-Aid approach to our core tax system. Richard Neal, Western Massachusetts, is, quote, furious, according to Greg Valliere. I would watch the congressman from Springfield.
It is hard to get things done in Washington. From New York City this morning, good morning. Tom Keene, Lisa Abramowicz and Jonathan Ferro. Your equity market all-time highs into Wednesday. From New York, this is Bloomberg. Starting the week quite nicely for the equity bulls. Record highs on Monday, record highs on Tuesday. Coming into Wednesday at all-time highs, and we pull back just a little bit, down 3. We're negative 0.07%. On the Nasdaq, we're down about 1/10. On the Russell, the small caps, down 0.4%. Two names to watch after the close yesterday and into the opening bell this morning. Switch up the board and get to them. Microsoft and Alphabet. Alphabet price target hikes, Tom, at Jefferies, at BMO, at Barclays, and other people are calling it a disappointment. A disappointment. We're validating a 60% move year to date on that stock. It's been a massive move.
Yeah, John, it's really important there on that. I mean, everybody's looking at YouTube in that division and saying,
sure,
yeah, still year over year, it's a nice pop there.
Microsoft, Tom, go to ERN on the Bloomberg.
Yeah.
Get your earnings surprises and look at Microsoft. The last time they missed was the third quarter 2016. It's been 5 years.
Yeah.
They beat again. Put that in a headline.
The quarterly pop goes back to 2014.
Stock's up 2%.
Yeah.
Just keeps moving, keeps moving.
Terrible.
And no one talks about it. That's what I always find amazing every year at the moment. Microsoft up 40% year to date or something like that. No one talks about it.
Continue.
They're rushing me along, Tom.
Yeah.
Up a few basis points on a 2-year towards
It's like you're
50
giving
basis
it's an
points.
award. Play the music. That's what we need, John.
It's like an Academy Award. It's like an Oscar, Tom. Every morning this show at 6:30 is like an Oscar. We're playing the music. Get out. Wrap it up. Thank you, Mum.
Here's your prize.
10-year in a basis point. 159.39. Tom Keene, the curve a little bit flatter this morning. The front end keeps moving higher.
I'm watching the curve and the yield. Let's go to 4 digits, 0.4911 on the 2-year yield. Gilles is at AXA, the great French insurer. His service at the Banque de France and then across European Wall Street speaks of international economics and the linkage of our central banks right now. We're thrilled he could join us pre-ECB. Gilles, I'm going to let John Ferro really dive into ECB and what Madame Lagarde is going to do. My question to you is more global. How linked are these major central banks right now?
Well, they're kind of linked because they all got into very, very similar policies at the peak of the pandemic. And the pandemic has been, to some extent, synchronized, at least in the investment economies. So their starting point is very similar between the Fed and the ECB QE programs in both regions. However, I would suggest that Europe and the US are still into very, very different positions from this point of view. The recovery started earlier in the US. The fiscal stimulus was higher than in Europe, which means that the output gap in the US is probably close to zero right now. So that the Fed talks about removing QE entirely, fine. That some members of the FOMC talk about hiking rates next year, fine. But we are not there in Europe. And the risk is that the market tries to create a sort of a bucket where every single central bank would find themselves. It's true that inflation is rising everywhere, albeit to a lesser degree in Europe. But you can feel this sort of generic pressure. If someone moves rates high or talks about hiking rates somewhere, obviously it creates a sort of mood music everywhere, even if I insist on that. Europe is definitely not in a situation where we need to think about that right now.
We saw that from central banks like New Zealand, like the Bank of England teeing up this rate hike. It really started to reshape the mood music. And Gilles, you're right to point out the ECB. The opportunity to push back is the December meeting. President Lagarde called it an important one, and permission to get technical if you wish. The flexibility around the current bond buying program, the emergency bond buying program, how much of that do you think needs to be carried over to what comes next, to what comes in 2022?
I think it's key because PEP, the program that they launched to deal with the pandemic, was immensely flexible, and it basically killed any chance that the market would test actually the strength of any of our national sovereign bond markets. Italy did not get into trouble, Spain did not get into trouble, because investors never knew when, if, and by how much the ECB would act to help a specific market. APP, the ordinary program, which is likely to survive actually March of 2022 and continue possibly well into 2023, is much less flexible. You buy according to the capital key. So they probably need to move some of the flexibility from PEP towards APP. I think some of that flexibility is probably quite consensual. For instance, Greece, which was not covered by APP, was covered by PEP. I guess they will find a way to continue covering Greece. That's probably a given. I guess also they will still have some room for maneuver around the capital key, the possibility to diverge a little bit. But in any case, I don't think that we will find a majority within the Governing Council to completely transform APP into PEP, that there will be some restrictions to flexibility, and that might be a bit of a complicated moment for some of the most fragile bond markets in Europe. But in general, I think that what's been happening is that the market knows that if need be, the ECB can be flexible. They could always bring back some flexibility. We've learned from this. Second, we've decided to mutualize public debt to some extent last year. That's a big change for the peripheral market.
You said something really important, Gilles, that Europe and the ECB is in a very different position than the Federal Reserve. And this really underscores the issue that Rebecca Patterson of Bridgewater was saying earlier, that in the United States, there is more of a demand side shock, and perhaps there is less of one in Europe and other places that didn't have the check sent out to each individual, the same kind of fiscal stimulus. What does this mean then in terms of what we should expect to see with inflation in the Eurozone, as well as how the ECB will respond if they will ever raise rates, given such different inflationary dynamics there?
I think it's key. First of all, if you look at core inflation, even if we measure it slightly differently in the US and Europe, the euro area is roughly at half core inflation as it is in the US. So we're nowhere near the same kind of paces. Second, if you look at demand, just look at where private consumption is in the US right now. At the end of the spring of this year, it was exactly where the volume of consumption should have been if no pandemic had happened. It was basically bang on its trend volume. In Europe, we were still something like 7% below our trade volume. So there is still a lot to normalize in Europe. Our fiscal policy, again, has been very different. So, the ECB can afford to be patient, and I think they will be patient on rates.
Gilles, very importantly, Mr. Weidmann studied academics in Paris and in France, and there was a big deal about this. You had a shingle out at Deutsche Bank years ago. I believe this makes you qualified to take over at the Bundesbank. I can see Moak at the Bundesbank right now. Okay, maybe not. Then who would be who would be appropriate right now for Christine Lagarde to have at the Bundesbank? Well,
in a way, it matters, of course, but Jens Weidmann had kind of put himself in such an almost caricatural position within the governing council that I don't think that his influence over the monetary policy of the ECB was that great. And actually, the point for Germany right now is probably to find someone who would gain influence at the ECB. And I think the right way to do this is to select someone who will be closer to the center of gravity of the governing council, which is definitely less hawkish than Jens Weidmann was. The complication is that the coalition talks are going to be, in a way, polluted by the need to decide on the next Bundesbank boss, because my guess is that the Social Democrats will probably push for someone like Kukis, for instance, who is currently in the finance ministry in Germany, who is known as a sort of kind of dove, at least by German standards. Whereas FDP, the Liberals, will probably push for someone more steeped into the Bundesbank tradition. That would be someone like Volker Wieland, for instance. So it's going to be a political choice. But I think Germany has an opportunity really to regain influence. But the right way to regain influence is actually to choose someone, maybe paradoxically, who would be a bit further away from the usual monetary policy culture at the Bundesbank, someone closer to the way we think about those things in France or in Italy.
Gilles, fantastic as always. Good to get your insights, sir. Gilles Moak there of AXA and the unofficial candidate to be the Bundesbank president. Tom, there is a good chance that whoever is the next Bundesbank president could be the ECB president as well. We've had two French individuals lead the central bank. We've had an Italian leave the central bank. We have yet to have a German lead the central bank, Tom.
Yes, it's controversial to say the least. I'm not expert in that, and there can be a turn taken, but I just really wonder what that debate would be. It's a different debate now with Brexit. I'll be very honest. It's a different calculus right now.
Well, we've got to have a different debate around the Federal Reserve as well, Tom. When are we going to start to talk about that a little bit more? I saw some reporting from the team down in Washington that the president started to look at this a little bit more going into year end.
Yes, I saw that.
I thought at the start of the year by now we would have a decision going into November.
Yeah, I'll go with that, except he's a little bit distracted.
Just a little bit, Tom.
And again, COP26, I don't think it's making that much of an impact right now in America. It may be a big deal in Glasgow, but I'm not sure it is here.
You nailed that, Tom.
Thank you. I've been working at it.
Elise, are you expecting to hear anything anytime soon?
Look, frankly, President Biden is running out of time, right? I mean, Powell's term, his first term, expires in February. He has to be re-nominated and confirmed by Congress by Senate, in order for him to get back in that seat in time. So what is President Biden going to do? This, to me, is the key issue, especially with all the other vacancies at the Federal Reserve. Which constituent does he want to appeal to within the Democratic Party?
Just thinking out loud, great person to blame if inflation goes on too long, right? Fantastic person to
can you get more dovish? Here's my question.
That's my point
honestly,
here. That's my point
but the issue is, can you get more dovish? And does President Biden want to put a hawkish Fed member? What Fed chair? Really, to me, that's the question. What president wants a hawkish Fed chair?
Equity futures this morning down about 2 points. Alongside Tom Keene, Lisa Abramowicz and Jonathan Ferro. Let's work through the price action for you. Your equity market comes in just a little bit. Equity's just a little bit softer. Come on, it's nothing. We're down 0.05%. Record highs again at the close on Tuesday. Into the bond market, yields are lower by a couple of basis points to 158.87. The euro back south at 116 and 115.88. And crude A lot of weakness in the commodity complex this morning. Crude, 83.54, negative 1.3%. From New York, on radio, on TV, this is Bloomberg.
With the First Word News, I'm Laura Wright. Democrats are trying a new and risky approach to taxation to help pay for President Biden's social agenda. They're proposing a tax that would affect about 700 people, those with at least $1 billion in assets and those who earn at least $100 million 3 years in a row. Meanwhile, a separate tax would require companies that report more than $1 billion in profits to pay at least a 15% tax rate. President Biden is zeroing in on whether to renominate Jerome Powell for another term as chair of the Federal Reserve. The president has started to meet with top White House and Treasury aides to review candidates. He hasn't settled on a choice, and it's unclear whether he's leaning toward reappointing Powell or replacing him. Bloomberg's learned that the CEO of British supercar maker McLaren is resigning. An announcement about Mike Fluitt is expected today. Fluitt has been CEO of McLaren for more than 8 years. This year, McLaren sold and leased back its headquarters near London. It also agreed to sell as much as a third of its racing unit to a consortium of US-based investors. Heineken got a reminder that the pandemic isn't over yet. The world's second largest brewer reported a 37% plunge in beer shipments in Asia as countries re-entered lockdowns. Asia accounts for almost 1/6 of Heineken's total revenue. Vietnam is its third largest market, and shipments there fell by more than half. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Live from New York City for our audience worldwide, heard on radio, seen on TV, this is Bloomberg Surveillance. Let's get straight to the price action. Coming into Wednesday at all-time highs on the S&P 500. Alphabet is a beat, Microsoft is a beat. I know we can talk about YouTube ad revenue, but let's get real. That stock, Alphabet, is up 60% year to date. TK, it's ridiculous. We're down 5 on the S&P, just a little softer by 1/10 of 1%. Into the bond market, we're down 2 basis points on 10s to 158.87. This curve is flatter because, Lisa, there's a move on 2s. 2-year yields just through 50 basis points for the first time post-pandemic. November 3rd is going to be really interesting. It is not about tapering. They're going to do that anyway. Yeah. It's about how they push back on rates.
And frankly, the fact that they haven't yet is interesting in itself, and we've heard this from a number of different strategists, but really they're looking at potentially a demand side shock. I really feel like that is something a lot of people have been looking at, although they look at both sides of this. If it's demand driven, the Fed may have to respond more quickly than other central banks.
We will hear from Amazon and Apple tomorrow just on the earnings side. We've gone through the big 3, 2 more still to come to make it a big 5. Tom, a bit of news on Evercore that I want to work with you on. Ralph Schlosstein will step down as the co-chairman and co-CEO of Evercore effective February 25th. A bit of change at the top of Evercore this morning,
Full disclosure, one of my favorite people in New York Wall Street, Ralph Schlosstein, has been a huge philanthropist for the city, the gentleman out of Denison. And what's so important here, John, is when we went boutique a long time ago, 10, 15 years ago, Roger Altman and Ralph Schlosstein built Evercore. They then brought in Edward S. Hyman at ISI, now called Evercore ISI, if you will. And this has been one of the real success stories of going boutique. Some work and some don't. And what's important here with the public service of both of these individuals is Schlosstein is the one that really drove the tone forward. I give them both credit, but Schlosstein's always been underplayed to Roger Altman, and that's unfortunate. He's been a huge impact.
Tom, as co-chairman and co-CEO, effective February 25th over at Evercore. Just want to turn to China briefly as well, Tom, and get to the news out of Evergrande. Lisa, did you read that story on Evergrande and the founder and leader of Evergrande and his house in Hong Kong?
Yeah, and how he got it, all the different loopholes and different, what was it called again? It was something amazing. The actual shell company that ended up purchasing it had something to do with fast food rather than the actual development company. The idea, he also got billions of dollars in dividend payments from the company over its tenure. This is what the government in China is trying to target. take some of that wealth and put it back into the company.
And that's where the focus is right now, and not on that particular story. The Chinese Communist Party said to be leaning on the owner, the founder of that company, to use his own personal wealth to pay back the debts. The other thing that's got a lot of attention in the last week was the suspected test of a hypersonic weapons system in China. A fascinating conversation has taken place with General Mark Milley, the chairman of the Joint Chiefs of Staff, with David Rubenstein. Take a listen to what he had to say.
I think it's China, and I've said that publicly many times. As we look to the future, and I think we are living in a historical epoch, actually, where we're seeing the rise of a country that is unlike something we've seen probably ever before. And it's one of the great historical pivot points, I think, that we've ever witnessed, which is the rise of China. And from the reforms of 1979 and Deng Xiaoping up till today, which is, I guess that's what, 41, 42 years or so, 4 decades, they've had an incredible economic run, and with that, they've developed a military that's really significant. As we go forward over the next 10, 20, 25 years, there's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia is important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran is still there. Terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
As we talk today, there have recently been some reports that the Chinese have a hypersonic missile that can theoretically go into space and then come down with a nuclear bomb, escaping our ability to knock it down. Is that something I should be worried about, or all Americans should be worried about?
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system, and it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that. So it's a very significant technological event that occurred, or test that occurred by the Chinese, and it has all of our attention, and we're paying it. But that's just one weapon system. The Chinese military capabilities are much greater than that. They're expanding rapidly in space, in cyber, and then in the traditional domains of land, sea, and air. And they have gone from a peasant-based infantry army that was very, very large in 1979 to a very capable military that covers all the domains and has global ambitions. So China is very significant on our horizon.
But can I presume that the United States has thought of doing a hypersonic missile as well, and that we are not caught completely flat-footed in our ability to maybe produce something like that ourselves?
We are clearly experimenting and testing and developing technologies to include hypersonics, artificial intelligence, robotics, and a whole wide range. Now, if you take a step back, what we're in history-wise, is we're in one of the most significant changes in what I call the character of war. But today, with the introduction of precision munitions, the ability to see all over the world, artificial intelligence, robotics, hypersonics, all of these things together, this is an enormous change in the character of war, and we're going to have to adjust our military going forward.
General Mark Milley there, the chairman of the Joint Chiefs of Staff. He'll be speaking with David Rubenstein in full, and we'll catch up with David Rubenstein a little bit later, Tom. Peer-to-peer conversations tonight at 9 p.m. in New York. Looking forward to the full conversation at 9 p.m. I just want to repeat what he had to say, Tom. What we saw was a very significant event of a test of a hypersonic weapon system, and it's very concerning. He goes on to say, I don't know if it's quite a Sputnik moment, but I think it's very close to that. It has all of our attention.
Sputnik is 1957, John. I lived that directly in the recesses of my childhood memory, and there was an intense fear of Sputnik and what it would do. And I think Milley characterized that within history, but within the classification of what he can and cannot talk about. John, I really want to say, more than any other military officer we have now, he's the most underestimated. He is ROTC out of Princeton. I can't convey how unusual that is. And most importantly, his father was on the shores of Iwo Jima.
Lisa, just stunning reports in the last several weeks.
Yeah, the key issue to me is the dissonance that we see in both the rhetoric that frankly has been harsh out of the administration and then the increasing move of corporations into China. How does this sort of diverge? At what point do corporations have a role to play in this U.S. government crackdown? I say this because actually, if you take a look at the tech giants and the CEOs there, they've been actually meeting with officials in China, almost as if they're pseudo-states, to sort of discuss the policies there. So how does that dovetail back to the shoreland of the United States?
It's fair to say that's a bit of a problem. Looking forward to catching up with David at 8:15 Eastern Time. In about an hour and 20 minutes on this programme. Tom Keene, Lisa Abramowicz and Jonathan Ferro, your equity market in 5, down 0.1% on the S&P, yields lower on 10s to 159 on 2s. We bleed higher. It's the rate hike story. We'll catch up with Mike Schumacher of Wells Fargo on it. Heard on radio, seen on TV. This is Bloomberg.
It does seem like the economic cycle is moving at warp speed.
Some central banks are trying to push back against this market view of where rates are going.
The market has repriced the hiking cycle significantly.
Markets been very quick to price out interest rate hikes by the Fed in the middle of next year.
We don't think that they'll actually be raising rates until 2023.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Beat and raise. The earnings keep delivering from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market down 5 at 0.1%. TK, it's a beat at Coca-Cola.
Yeah.
It's a raise there too. It's a beat at McDonald's. Those numbers dropped in the last 60 seconds.
I'm looking at them right over here on the 47 screens I've got, John. I have screens you do not. And what I see here is McDonald's 12.7% comparative sales. That's way better than the 10% expected.
That's some schoolyard stuff, Tom. You've got
Yeah.
screens I don't have.
Yeah.
About 10%. That was the estimate.
I'm watching
the number was
90
up
Day Fiancé's
12.7.
on right down on the one there.
I bet you are. You can tell. Upside surprise on McDonald's, Tom. Just looking at Coca-Cola going forward from here.
She said
confidence in the underlying momentum in the business. But TK, they go on to say expecting elevated commodity inflation through 2022.
Okay, that can be the worry here, and we're going to see that inflation as well. But, John, again, it's adapt and adjust, and we saw that. We're going to see it tomorrow. And what's interesting, John, does it filter down from big names and from juggernaut tech names down to mid-cap companies, down to small-cap companies? To me, that's a tangible question.
I've said this through the last couple of weeks, Lisa. I keep saying it. So far, so good this earnings season.
So have we seen peak margin pressures? Are we seeing the peak supply chain pressures, the peak labor market shortages? Or is this just the beginning? And frankly, companies have been able to digest it until now, but going forward, will it be more difficult? And I say this, and I know that Tom is groaning, but John, this really is a question, right? Can we count on their projections going forward? And frankly, are they then going to have to pass along more to the workers?
The corporations are telling you it's going to persist. Coca-Cola this morning is telling you that elevated commodity prices, inflation will persist in 2022. The officials, the policymakers are telling you the middle of 22 now. That's a date change, Lisa. They're going through the middle of next year. Corporate America, when you listen, they're talking about this going way beyond the middle of next year.
So Bloomberg Economics put out this chart showing how all of the components are sourced for all of the different goods that the United States uses. So many of them hinge on products from places around the world. One part gets delayed, the whole thing gets thrown off. How do we get through this in just a matter of months?
The equity market's holding up. All-time highs into Wednesday. Equity futures down 3. We're negative 0.1%. Let's get to the price action this Wednesday morning. Good morning to you all. Yields in a basis point on 10s to 159.57. It is the move in 2s that gets your attention. We push up towards 50 basis points. We breached that level very briefly. Tom, it's the smallest of challenges to Chairman Powell next Wednesday.
It is. It's small. What's so important here, John, is the trend. And if it continues, each move is frankly not a big deal. But I'm sorry, we're back to 110 basis points, 2's10 spread. Can you imagine a 99 basis point flat curve?
How hard can they push back, Lisa, against rate pricing in this market right now?
How hard do they want to push back, given the fact that a lot of people are looking at the demand side pressures in the U.S. economy? Is the pressure the same for the Bank of Canada? Is the pressure the same for the ECB? Bank of Canada comes out today at 10 a.m. with their rate decision. The expectation, no move in terms of the rates. The expectation is to curtail the bond purchases. But here's the issue. How much do they indicate that they are worried about inflation that does stem from supply supply chain pressures from labor market shortages that most people think will abate versus, say, demand side pressures like the Federal Reserve is facing. Also today, we get earnings from General Motors and Ford very much front and center. How do they compete against Tesla, which is basically share price to the moon and is worth $1 trillion? How do they say, yes, we are going to get a piece of the pie and invest our cash? Also, of course, they're going to be commenting on the supply chain pressures, how much they're getting vehicles and how they can keep the prices as high as they have been, because frankly, they have been absolutely on a tear, up about 20% year over year. And at 1 p.m., Tom Keene will be very much awake watching the 5-year U.S. Treasury auction to try to get a sense of just what we expect to see with the rate hiking cycle over the midterm, not just the near term, but the midterm. This has been where a lot of the action has been. But John, actually, of late, you have seen the 2-year actually take the lead with action. People pricing in near-term hikes, but fewer of them as the Federal Reserve reckons with a normalizing economy.
Did you ever think that 50 basis points would be seen as a small challenge to the Federal Reserve?
No.
50 basis points on twos.
No, that's how silly it is.
That's where we've got to.
Dead on, John.
Mike Schumacher joining us now, Global Head of Macro Strategy at Wells Fargo. Mike, can you comment on that? Did you ever think that 50 basis points on a 2-year would be seen as a small challenge to the Federal Reserve?
Frankly, it's crazy, John. And it's interesting when you consider this in the context of where yields had been 2-3 months ago. Yeah, 50 seems like a big number, but I agree with you. It's really pretty crazy for that to upset the Federal Reserve. And frankly, we think these expectations or rate hikes next year for the Fed, they're pretty seriously overcooked. I agree with your point. The Fed may not push back too aggressively, but the market's gotten ahead of itself.
So, Mike, just reconcile that for me then. You think it's overcooked, but you don't think the Fed will push back. Why?
Fed will push back a little bit, but to some degree, the Fed doesn't know what to expect. So when you think about the source of inflation, yeah, it's supply chain. What can the Federal Reserve or the Bank of Canada or Bank of England do about the supply of semiconductor chips or the amount of containers flowing from Shanghai to Los Angeles? Not much, but it can deal with expectations. And I think the policymakers are pretty concerned that expectations have become a little bit unglued. So would they like to tamp that down a little bit? Yes, but aggressively, probably not so.
Mike Schumacher, your Sarah House was just outstanding the other day on extending out the x-axis. We all had a belief, call it summer, late summer, now into autumn. We now go into the edge of November. Michael Schumacher, how have you on a global basis extended out an induced boom economy as it tries to get back to something normal? Are you in 2023?
Yeah, it probably is a 23 thing, Tom. 22, you've got all sorts of crosswinds still at play. And again, the big thing that strikes us, and I'm sure Sarah would agree, it's the level of uncertainty out there. You just don't know how quickly some of these supply issues will be resolved. And with respect to the, let's say, the consumer basket, there's been this tremendous bid for goods. People have been surprised, I think, that services have languished. What if that actually picks up some steam? And you see consumers picking up a lot more interest in services. And you can see inflation stay very high for quite a while. So I do imagine it's a 23 event that we get a much more normal looking economy.
Mike, a key component to this uncertainty really is the source of inflation. You said that it's demand driven. We just were hearing, or supply driven rather, we were hearing earlier in the show from Rebecca Patterson of Bridgewater that she thinks it's demand driven. Why are you confident that this is driven by the supply chain disruptions more than, frankly, the fact that spending has remained so strong in the face of, frankly, even the higher unemployment rate, simply because of some of those checks and other support?
Spending has remained strong. That's true, Lisa. And it's interesting. I can't recall any recession ever, frankly, in which you've had consumer spending stay pretty aggressive and personal income remain very high, especially in the U.S. with all the federal support. And that's the demand story. But on the supply side, it's interesting when you look at how inflation's been pushed. It does seem to us it's been much more on the goods side. And really that relates directly to supply. So I think until you get that switch over to services, from our perspective, it's more goods and it's more on the supply side, much less demand.
What will make you shift your view on that, Mike? What data?
Yeah, you can look at the services data, for instance, Lisa, and still you've got, call it zero price increase over the last 5-6 months, something like that. If we see a decent uptick there, I think that's going to be an indicator that things are switching. And also goods inflation's been crazy, 7% plus after deflation for the last 20 years. So that's got to be a case in which the pot comes off the boil.
Mike, would you buy fives here on the Treasury curve? You a buyer?
I am not, John, and here's why. So we do think, like most of the world, I suspect, that Chairman Powell announces tapering next week. And you might say, well, if everyone expects it, surely it's priced in. I think most of it probably is, but not all. And when you consider the Treasury curve and what investors really want to buy, I'd say the linchpin has been the 5-year. That's been the part of the curve it's got the best carry, call it 4 or 5 years, something like that. So we're a seller of 5s until you get the taper announcement. Perhaps a little bit after that, we might reverse and buy, but I would not buy now.
Interesting. Mike, thank you. Good to catch up, sir. As always, Mike Schumacher there of Wells Fargo on this Federal Reserve. Next week, full coverage, special programming, as always, on Bloomberg TV and radio on the Federal Reserve decision. The Fed decides. There'll be a news conference with Chairman Powell afterwards, which we will, of course, take in full. Tom Keene, just getting a little bit more detail from McDonald's. This is pretty interesting stuff. The team here at Bloomberg breaking it down. The regional story, Tom, country by country, geography to geography. China, the clearest negative. Sales slipping due to the COVID-19 resurgences. Just getting some insight into an economy from an individual company. But there it is, Tom, from McDonald's on China, the clearest negative.
They're doing it differently than we are. This announcement, I believe it was yesterday afternoon, John, that we're going to see pediatric vaccine in America. How removed is so much of the world from that wonderful news?
Clearly the threshold to tighten restrictions up there, Lisa, is different. We know that. But just to hear a company say it, what they're experiencing on the ground, just gives you a little bit more colour as to what's happening.
And frankly, it gives a hint as to what the potential slowdown could reap in terms of how it trickles out into the rest of the emerging markets complex. I mean, how confident are we about the numbers that they've been putting out in terms of an accurate reflection of the slowdown that has persisted as they continue tightening restrictions?
We've seen bank after bank after bank cut estimates for that economy going out to 22. Tom, going out to 22, let's have a look at these numbers again. McDonald's sales plus 12.7%, the estimate plus 9.95. A beat. Revenue over at Coca-Cola plus 13 to 14%. That's the full year view. They had seen 12 to 14, so that's a small little upgrade to the full year guidance there, Tom. And it's a beat as well, once again. And it's looking good for corporate America so far, Tom.
They're adapting, and again, they're adapting within a goose boom economy. Organic revenue growth estimated at Coca-Cola, a center tendency of above 13%. That's extraordinary. Those aren't normal numbers, John. That's not a normal banner on TV, on radio. All you need to know, it's supposed to be nominal GDP. It's not. It's a boom.
I know it's your favorite restaurant, so I'm just going to say, Tom, they're opening 1,500 restaurants globally in 21.
Yeah, and I go to page 42 of the press release where they've got the paragraph on that McDonald's at Zurich, Switzerland, with the $14 number 2 value meal.
They're closing about 325 restaurants in the US in 21, Tom. About 800 net restaurant additions.
John, you and me breakfast
21.
This morning?
I think we should go for a test.
Go to McDonald's.
Make a little video. What do you want to eat?
Well, I usually have a double apple tart thing.
Okay. You double them up?
Yeah,
you buy two?
Yeah.
You buy two and double them up. Do you really?
Oh, yeah.
Okay.
Oh, yeah, buy two.
I shall record that later. On radio, on TV. I'll spare you that. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. On Capitol Hill, Democrats have unveiled 2 new taxes they hope would help pay for President Biden's social spending package. One would target billionaires' assets or those who earn at least $100 million a year for 3 years in a row. The other is a minimum tax for corporations. It would require that companies that report more than $1 billion in profits to pay at least a 15% tax rate, even if they qualify for lots of tax breaks. China has slammed U.S. efforts to boost Taiwan's participation in United Nations organizations. Beijing says the self-ruled island has no right to join the UN a half-century after it was kicked out. Secretary of State Antony Blinken has called on other countries to join the U.S. in pushing to give Taiwan a greater role at the UN. It's another blockbuster deal involving Hertz and Tesla. Uber drivers in the U.S. will be able to offer services with Tesla electric vehicles rented from Hertz starting next week. Meanwhile, Hertz signed up Carvana to dispose of rentable cars it no longer wants. Earlier this week, Hertz ordered 100,000 cars from Tesla. A coronavirus shot for the youngest school-aged children in the U.S. is on track for likely approval. A panel of U.S. experts says that benefits of a vaccine made by Pfizer and BioNTech for children from 5 to 11 exceed its risks. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
I sure do think there's a high probability that's going to happen. And I think that basically this infrastructure bill, I would like to hope it passes Wednesday evening. The president needs to take something with it by the end of the week.
The words of Senator Joe Manchin there of West Virginia. From New York City this morning, good morning. Tom Keene, Lisa Abramowicz and Jonathan Ferro. Your equity market down 2 on the S&P. We're negative 0.04%. Just a little bit lighter, softer, lower, negative 2 on the S&P 500. The numbers so far, earnings doing what earnings do. Yeah. They beat expectations. Coca-Cola, Tom, McDonald's, another this morning.
I'm going to go, it's the way they beat. John, that you're absolutely right, and the cynic in you is 100% correct on research. They always manage the message to beat. I mean, I don't like the word beat, frankly. It's the way we're beating. And, John, we're beating with a revenue oomph forward. The forward guidance on organic revenue and just outright guesstimates of revenue are really something.
One theme on the supply side, Tom, because of the constraints, the higher prices, people thought it might weigh on demand, on revenue on the top line. It doesn't look like that's happened. It does not look like that's happened in a big way.
It's microeconomics and it's ambiguity, and there's a give and a take. And frankly, there's an unknown, and we're learning as we go in a natural disaster. But I'm sorry, company to company, things look better than good. I don't know what else to say.
And Tom, it's going to go on longer than people thought it would. Coca-Cola this morning, I'll repeat that line. They expect elevated commodity inflation into 22.
This is critical. Let's take Doug Cass, who likes to trade short-term vision. Doug has a long-term vision on Amazon. What's our vision, our collective vision, John, of some of these companies, I don't care what they are, out 3 years or 5 years or 10 years? And no one's doing that. No one's thinking out that far.
We will hear from Amazon tomorrow, Tom, alongside Apple as well.
We will. Right now, let's hear from Washington. Jack Fitzpatrick joins us, our Bloomberg government reporter. Jack, I'm confused. You're the one to provide accuracy and brilliance. Did these bills pass together or separate? Where do we stand on that right now?
That's the big question in Washington. Democratic leadership, it seems, would like to get the infrastructure bill passed. That has already passed the Senate. It's waiting in the House. But after meetings between Speaker Pelosi and Pramila Jayapal, the chair of the Congressional Progressive Caucus, there does seem to be a significant amount of opposition to voting on an infrastructure bill until there's an actual vote on the tax and spend reconciliation bill. So they're at a point where they need to try to whip the votes. If they get to the point where Republicans can make up for any lost progressive votes, that could do it. But as of late yesterday, it didn't look like there was a clear path forward on doing infrastructure without reconciliation.
From the comments of the senator from West Virginia, out into November, in Vallier this morning, Greg Vallier with a scathing note, he talks about a vague agreement in principle. Is that what you're going to be given, Jack, an agreement in principle, or are they actually legislating?
Right now, they're talking about bullet points rather than legislative language. It would probably take a while to turn these proposals into legislative language. What you saw last night on the so-called billionaires tax, the unrealized capital gains tax proposal from Senator Wyden, is a summary and a somewhat detailed list of how it would work, but we don't have a bill on that. And again, even as of very late yesterday, talking to Senate Democrats about whether they could support this, they said they need more details. So this is sort of a proposal in principle. They may get to a real agreement in principle that signals they can pass something with a majority of the Senate. But a lot of the time when that kind of thing happens, there's a handshake deal. It can take a little while to turn that into legislative text, and then issues pop up. So we're not really that close to the finish line right now.
Jack, I kind of feel like we've been having the same conversation for the past couple of months or longer even, in terms of, do they have a deal? Don't they have a deal? Do they agree? Don't they agree? There are disagreements. We don't know. How can you judge progress at a time when there's so many disparate parties that have to go back and forth in these negotiations?
One, if they announce a deal, even if you should be skeptical that they're fully on board, that is a step forward, because lawmakers don't want to hold a press conference and take pictures and say we have a deal and then have everything fall apart. But really, you cannot say that they're across the finish line until they have the votes, especially in a 50-50 Senate and a very contested House, until it passes the chamber. You probably remember with the infrastructure bill, before they were able to pass it in the Senate, they announced two deals. They announced a deal on basically what was going to be in there. As they turned that into legislative text, there were issues that came up just in the details. And then there's another big announcement saying there was a deal.
Yeah.
The reconciliation bill is complicated enough so that we could hear about multiple deals as they move through these phases. Each one is a step forward, but it's not passed until it's passed.
Jack, I ask this as President Biden heads the G20 meeting, and frankly, the disagreements within the nation tie his hands somewhat in trying to convince some of the allies that this time is different, that frankly, America is back with respect to how it acts in the world. A lot of people are saying it's too divided to have that same sort of role. How is President Biden trying to message that as he heads to meet with national leaders?
On the question of whether it's too divided, that may be sort of ancillary to just the fact that Biden needs some accomplishments, needs major legislative accomplishments, and is struggling at a point where his polling is not great, and he's trying to push these across. Probably the bigger questions that he faces internationally with this back and forth on his legislation is, when he makes promises on climate issues and tries to push other countries, what can he actually accomplish at home in this reconciliation bill? I think the president makes it very clear that this was bound to be sort of a messy process, pushing major legislation through this kind of House and Senate. So the division isn't necessarily the big concern for him. But the fact that he's trying at a time when his poll numbers are tough, 2022 looks difficult, to get something significant done, that's the main challenge.
Jack, thank you, sir. As always, Jack Fitzpatrick there, down in Washington. The first big test with the electorate, Tom, arguably in Virginia next week, November 2nd.
It's going to be in Virginia, and of course, the matchup there. It's interesting to see, John, the play here, where the president's showing up to support Mr. McAuliffe, and you wonder where Mr. Trump fits in with the gentleman on the other side, Mr. Youngman.
Well, they want it to be a referendum, Tom. Glenn Youngkin, anyway, wants it to be a referendum on the current president. The current president would like it to be a referendum on the former president because that was the approach they used last time around and won the state by 10 points.
I think I understood what you just said.
Did that make sense?
You nailed it.
Did that make sense?
It
that seems
sense.
to be the strategy, Lisa, at least, coming from the Democrats.
How do you galvanize unity at a time when there's very little in the Democratic Party? And I think that really goes to President Trump because he was one of the greatest unifying factors of the Democrats out there. And that really highlights, frankly, some of the challenges right now in Washington.
Futures this morning, unchanged. Bit of a snooze this morning, guys.
Yeah,
it's nice.
But John,
all-time highs and we settled down, Tom.
We had every excuse to pull back. We haven't. I'm sorry. It's a bull market.
Just a bit of calm, Tom, this morning.
It's a bit of calm.
Yields in a basis point. On a 10-year to 159.39. Yields up a couple of basis points to the front end on twos. Through 50 basis points briefly this morning. That's your next stop for this market. The earnings look good. Apple, Amazon tomorrow. We'll see if they look good. And then it's on to Chairman Powell next Wednesday and payrolls Friday, 2 Fridays away. On radio, on TV, this is Bloomberg. Wednesday morning, good morning. This equity market, a bit of a snooze after an all-time high at a close yesterday was spoiled. It was a beat on McDonald's, it was a beat on Coca-Cola, a beat and a raise from them. Your equity market doing nothing. The Nasdaq down a tenth, the Russell of small caps down 4. It's on to next week after you get over tomorrow. Apple, Amazon in the mix tomorrow after the close. Next week, Federal Reserve decision on the Wednesday, payrolls Friday. On the Friday, switch up the board and get to the bond market. 2s, 10s, 30s. Yields look like this. Down a basis point on the long end. 10s, a break of 160, 159.39. Down 2 on 30s. Just above 2% here.
Bizarre.
It's the move on the front end, Tom. Just this lift again. Going into Chairman Powell next Wednesday. How hard does he push back against this? Green light for taper, okay. What about that rate story?
John, I'm fascinated by this. And, you were out front on this, say, 5, 6, 7 days ago. Where are we going to be on November 1 or November 2? I don't know.
November 3rd. when that decision comes.
No, I know,
Tom.
but as we get to that,
I know what you're saying. We've got to
there's
build
going to
up.
be a
I was
tension
just
point.
finishing what you were saying, Tom.
Thank
November
you.
3rd is
You did
when the
your
decision is.
extend
Just in
this,
case
John,
people
please.
got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
Wednesday's not going to be a live meeting for interest rate hikes at the Federal Reserve. Thursday could be for the Bank of England. Switch at the board and finish on cable. Sterling. We're at 137 right now. 134.27 is where we were at the back end of September, Tom. The fear is that they might be hiking into weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. 137.22. You know who's in charge here. Sterling just a little bit weaker, down by a third of 1%. TK, is that meeting next Thursday a live one or not? Hugh Pill at the Bank of England, the chief economist, says it is.
Taylor's going, what did I parachute into?
Well, she clearly got the short straw this morning, didn't she? OK, I'll wrap it up. That's your cross-asset price action, 137 on sterling. Let's get some movers with Taylor
Academy,
Riggs.
thank you,
Good
John.
morning, Taylor.
It is my pleasure to be here, and it's sort of a pun kind of morning, according to Dan Ives over at Wedbush, saying it may not be a 600 touchdown, it may not be a World Series, but Microsoft is pretty darn close. It's not very often you see a company of this size posting these types of gains. A little bit opposite story here for Alphabet, though. We got those earnings after the bell yesterday as well, showing some signs of slowing within the cloud market. But MoffettNathanson saying fourth quarter is going to set up nicely. Don't get too concerned. Same thing here with Twitter. Don't get too concerned. It actually looks a little bit better than perhaps some of the warnings that we got from Facebook or Snap around those Apple iOS changes. And so overall, pretty good. What is not pretty good, though, here is Robinhood. You're down about 9%. This is so interesting. They had about 1 million customers on the wait list for their crypto trading platform, but crypto trading actually in the quarter really slowed down revenue, and that's causing a big concern here for some of the market.
Taylor, is that traditional securities analysis at Robinhood? Seriously, we're basing this earnings report off the Doge, right?
Yeah, I mean, do you want me to be honest? I mean, you can
no,
look
it's
at the
surveillance.
highlight.
You can be honest in the close. For surveillance, you can lie. Go.
1 million customers on the wait list for their new wallet. But yeah, I mean, crypto trading didn't look good in the quarter. So I'll just leave you at that. I'm not a Doge expert. I heard that you guys didn't do Doge in the mornings. I thought we only did that light stuff in the afternoon. Let's change up the board and get to some of the other serious heavy hitter stuff here. Take a look at McDonald's and, of course, Coca-Cola. John was saying that, of course, those were sort of the beat and the raise quarter. Really interesting that at least with McDonald's, customers are ordering more and they're paying more and really navigating that labor shortage well. Coca-Cola, well, hey, maybe we're actually still going out to eat. The restaurant sales doing pretty well, Tom.
Taylor, come back soon.
Thank you.
Taylor,
it's good to see you.
Good.
Thank you.
Okay, wrap it up, Taylor. Okay, there we go. Let's go right now and talk very seriously about the character of this market as defined through the derivative space. What do you do with all these earnings, this boom economy, this bull market? What do you do forward? Stuart Kaiser joins us from UBS. They have an optimistic tone on the equity space. Stuart, what are you going to write about for Monday? I'm just curious how you take this odd bull market and drive it forward with a derivatives analysis.
You know, it's a great question. Good morning, Tom. Hopefully I get to pick my own exit music. Look, you know, our view kind of coming into earnings season was basically the market was underinvested because of what had happened in September. You know, Taylor went through some of the numbers. We've gotten some big beats across the board on S&P earnings, and I think the markets are responding positively to that. I think your question is the right one, though. It's once we get through these couple of big weeks of earnings with the Fed as a backdrop and what's going on in the rates market, you know, how do the equity markets behave once earnings are behind us effectively? And you know, the last couple quarters, I think what we've seen is large cap tech and quality do great during earnings because they're putting up those results.
Exactly.
But usually once we get through, you kind of get back into that value kind of race trade. So that would sort of be our base case.
Agreed.
But it's going to be read react.
Do you see now, when you synthesize your traditional research into derivatives, a redux, though, you know, I can't do the math, John, help me here, October, November, December, in January of next year, are we going to be doing the same ballet we're doing this morning?
You know, I think January is, going to be very interesting because, you know, you're going to still have inflation accelerating. I think a lot of people who are then going to be looking forward the next 12 to 24 months are going to be looking at a decelerating growth picture, both earnings and GDP. So I think early next year is definitely going to be a tricky time for the markets as they try to balance what's probably, we don't have inflation peaking until the end of Q1, and then the outlook is for slower growth. So I think that is going to be, you know, kind of a very tricky time for markets. But I think into year end, you know, hopefully people just want to run it back, and that would be our general assumption at this point.
So let's talk about inflation and what it means when it peaks, how high it will peak, and then the trajectory of its fall at a time when earnings are beating because the demand is there, even at these high prices. What's your view?
Inflation's been a tricky one, both macro and micro. I think coming into this quarter, we directed clients to really focus on stocks that had weaker pricing power and could be sort of the losers in the inflation story. And we saw that a little bit in 2Q, where some of the larger consumer staple stocks talked about inflation and their stocks made really large moves. So I think there's a micro story here where you have some stocks that can deal with the higher inflation and some stocks can't. And then you have a macro story, which is, I think, big picture, what is the path of inflation? I think what we're most concerned about is, equities respond generally positive to inflation until it hits a certain level. And for a lot of markets, particularly large cap tech, we're starting to get to those levels where, inflation starts to be a negative, not a positive. So you have a micro story and a macro story, and obviously the market is trying to sort that out right now.
Wait, Stuart, this is really important. Are you saying we're already at levels of inflation that will hurt big tech?
Yeah. In our frameworks, the beta to real rates and inflation for NASDAQ and semis and some of those markets has already started to shift negative. For S&P and Russell, it's positive, but kind of closer to zero. So, yeah, we do think there are parts of the market already that are, not real happy with, with where inflation is right now.
How do you handle big tech? The skewedness here, I added it up the other day. It's like 24.6% of SPX. And, everybody's got their bench. But, Stuart, how do you handle that intellectually when you look at all the mathematics you're dealing with?
Yeah, tech's a tough one. We were bullish coming into earnings season, as I mentioned. Big picture, I think if you got an inflation surge, tech is a part of the market from a macro perspective that is, as I mentioned, might be under some pressure. I think the real hard question is if you get into early next year and inflation's high, but growth is decelerating, do investors want to go back and hide in tech again because you have those high margins and those really strong earnings? Or are they scared off by rates? So, I think from our perspective, we've tried to, be involved with tech when we think earnings are going to be reported and people are going to really focus on the strong fundamentals. But in between earnings, when folks are more focused on rates and inflation, we've sort of shied away from tech. So it's been a little bit of a whack-a-mole to some degree.
So, Stuart, the biggest argument against what you just said in terms of inflation already hitting the point to big tech is the earnings that we just saw that absolutely did not show any sort of ramifications from higher inflation. They are still there. And there, frankly, is a question that goes to what Tom asked earlier about big companies doing much better than smaller companies, able to consolidate, able to pass along price increases that much more. How do you counter those arguments when you say, you know what, we've already passed the peak when it comes to inflation rates and big tech?
Yeah, look, I think when people are worried about inflation and rates relative to tech, I don't think it's as much a margin and earnings story. I think it has a lot more to do with valuation. And, we could have a debate of whether large cap tech should be, sensitive to rates from a valuation perspective, but I think most investors look at it through that lens. So the question would be, if your earnings are very strong but starting to come off a little bit, and you've got this strong rates and inflation impact on valuation from a negative perspective, how do you balance that? So, again, if you're thinking about a negative impact from inflation on tech, it would be, I think, through the valuation channel as opposed to earnings and margins.
Stu, final question is the important one. You're 5-0 up. The other team is down to 10 men. Don't you just go for it with 30 minutes or so left, Stu? Don't you just really go for it, make it 6 or 7?
In a rivalry game, I think definitely, Jonathan, without a doubt.
We call those a derby. A rivalry game is a derby.
What were they doing on Sunday? Why not just finish them off, Stu? Make it really painful.
I think they were just, trying to enjoy it, right? Embrace it, soak it in.
We were all enjoying it, apart from the Manchester United fans. Stuart, thank you, sir. That was the important take from Stu, who I know watched that game as well. Over at UBS, Tom, I want to talk about a single name, and it's GM. General Motors is up about 38% year to date. In the pre-market, it's at 59.24 and is up more than 3%. And here's the why. It's a beat on EPS, 152, the estimate 97. And it's a beat in terms of the guidance as well. They now see full-year EPS 570 to 670. Previously saw 540 to 640. It's a beat and a raise for a company that the stock is just having a great year, Tom. And it's not just GM, it's Ford too. Ford up off the back of this by more than 1%. And I believe we catch up with the chief over at GM a little bit later this morning, Tom.
Yeah, we're going to do. There's a lot of questions from Mari Barra. But, John, what's fascinating to me looking quarter to quarter, 12 months back, They're making less money, obviously pandemic. They can't build the cars, chip shortage, and all the other worry. But the answer is the cadence has changed. The discussion, John, of Detroit in big auto making 8, 9, 10 cents in the dollar, it's a changed discussion.
How we value these companies,
Yeah.
Lisa. Maybe a lean towards tech a little bit more.
Well, especially with this guidance from General Motors CEO Mary Barra, revenue from EVs alone will grow from $10 billion in 2023 to $90 billion at
There's
the end
a
of the
number.
decade.
Wow. We'll catch up with Mary Barra a little bit later this morning. Looking forward to that conversation, I believe, with David Weston. That's going to be an interesting listen.
Is this the wrap it up music we're playing now?
This is it, Tom, because we have to get to a break.
Wrap it up.
This is the polite way of getting to a break, not the rude way of getting to a break 10 minutes early because you don't like what I've got to say.
It's music.
I thought we were colleagues.
Yeah, have a mimosa.
Tom Keene, Lisa Abramowicz, Jonathan Ferro. John and Lisa like each other. Tom and I are paid to like each other.
Yes,
Diane Swan coming up a little bit later from Grant Thornton.
Well said, John.
This is Bloomberg.
Well said.
With the First Word News, I'm Laura Wright. Democrats are trying a new and risky approach to taxation to help pay for President Biden's social agenda. They're proposing a tax that would affect about 700 people, those with at least $1 billion in assets and those who earn at least $100 million 3 years in a row. Meanwhile, a separate tax would require companies that report more than $1 billion in profits to pay at least a 15% tax rate. President Biden is zeroing in on whether to renominate Jerome Powell for another term as chair of the Federal Reserve. The president has started to meet with top White House and Treasury aides to review candidates. He hasn't settled on a choice, and it's unclear whether he's leaning toward reappointing Powell or replacing him. China's President Xi Jinping is calling for breaking new ground in weapons development. Xi told a military conference that China must establish a modern management system for the defense industry. That comes at a time when both the US and China are rebalancing their forces for what the Biden administration has called strategic competition. Third quarter sales beat expectations at McDonald's. US customers placed larger orders while paying higher prices. Meanwhile, international results were boosted by fewer pandemic restrictions. McDonald's comparable sales were up 12.7%. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
The market has been screaming that the economy was not going to roll over for quite a while now, and it feels as though people are waking up to it. So the call of a big correction, I thought, was completely misguided because the internals were saying no, economy was strengthening. And my experience is, a big correction occurs with a growth scare, not a growth acceleration.
Andrew Sliman there of Morgan Stanley on a better equity market this morning. Just a little softer, but coming off all-time highs on the S&P 500. From New York, alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Equity futures then heading just a little bit lower. Yields in a basis point on 10s to 159.22. But on the earnings story this morning, so far so good. McDonald's, Coca-Cola, General Motors, GM with a beat and a raise. We'll catch up with Mary Barra a little bit later. GM positive in the pre-market. Want to head to Westminster just briefly. You think we're doing this for me? We're not. We do this for Tom. Chancellor Sunak in the UK, Tom, delivering what is traditionally called the autumn statement. As we hear from him, Tom, what you get from them twice a year is just an update to the forecast from the Office of Budget Responsibility, and it's an upgrade, Tom, to the forecast. An upgrade to the forecast for 21. They were looking for 4% growth in 21, now 6.5% in 22. The economy could grow 6% in 22, Tom. But here's what's original about this moment in the UK compared to other places.
Please.
Better growth in the year ahead, fine. But this is the commentary from Chancellor Sunak. We need to strengthen our public finances. Underlying net debt must be falling as a percentage of GDP. That, Tom, is where the focus already is for this Chancellor. And I have to say there's a bit of daylight, I think, Tom, between this Chancellor and this Prime Minister. This Chancellor, a little bit of a fiscal hawk compared to this Prime Minister.
Does this get them reelected? Or, to use an American phrase, how distant is this message from conservative or those borderline conservative districts that they stole from Labor?
The so-called Red Wall in the north, Tom.
Yeah, it's like Game of Thrones.
Yes, there's some work to be done. Let's put it this way. If that recovery is good, Tom, and it delivers and we don't see the pain in the labour market, then okay. But if inflation becomes a bigger story and the Bank of England tightens and we don't get a six handle on GDP, then we might have some trouble.
When I got to have at the desk, when we go over to Davos and we're in London, I want at the desk, can I get my own red box made by Barrow, Hepburn and Gale?
We can make you a red box. You know what was original about this, Tom, compared to the autumn statement of the spring budget? For the spring budget, the Chancellor could have an alcoholic beverage.
Really?
But not for this one. But traditionally for the spring budget, you could have an alcoholic beverage.
Really?
So you won't just get the red box in spring, Tom. You can have a drink too.
Really?
Are we done with this?
We're done with this.
Anna Just in case the audience in America and worldwide gets confused. We don't go to Westminster for me. Tom loves it.
I love it. I love it. Good morning, Gonzalo Vino used to take me there years ago. Anurag Rana's with us right now. This is important. It could be like, so I got to get my glasses to talk to him. It's like a 3-hour conversation. We're going to squeeze it into no time this morning. What is the singular feature you want to explain about this tech moment of Microsoft, Amazon, Apple, Google, Alphabet? What's the thing when you look at the revenue and all the income statements? What does it say about tech America?
The spending is phenomenal. There is no stopping. There may be slight tapering of growth rates, but this is not ending anytime soon.
How do you respond to the joy here and the idea that the gentleman from Microsoft says it could be disinflationary or deflationary to America? Tech, all the tools we're going to see. Where are we going to be in 3 or 5 years with all this stuff?
Greater automation, less number of people used to do things, increased productivity. This is why it's going to, help in countering inflation.
How much, Anurag, is the big story from tech earnings that Microsoft is just killing it and winning market share with respect to the cloud?
It is. In fact, one of the big things that we talked about is for both Microsoft and Amazon, they're going to take share away from smaller vendors because they have scale and they have more services than anybody else can offer. And moreover, and this is one of the most important points, is they spend more on security than any other vendor out there.
So this is really important point, especially the one that you said about them taking business from other people. I mean, the idea of them taking business from Alphabet, which we saw certainly, or the hints of it in their earnings, may not make people that concerned. But you go beyond that. Who else are they taking share from? How are they cannibalizing from the rest of corporate America that may not benefit in the same way that we see from tech earnings?
See, they're taking share away from a lot of legacy companies, the likes of IBM, Oracle, and other internal IT operations where people have been, putting together systems over the past 20, 30 years. All of those needs to be upgraded. It has to be done over the next few years. We are still 20%, only 20% in public cloud. That number needs to accelerate to at least 50 over the next several years.
That's a room to move, 20 to 50%.
It's huge. Yeah. It is huge.
You wrote an essay 3 weeks ago, I'm going to say, where you said the street's flat out wrong about Apple and iPhones. You see an iPhone growth of 6.5%. Dan Ives on this show a couple days ago top-ticked you to 8, 9, 10%. Do we have a clue what's going to be delivered tomorrow from Apple and Amazon?
So from Apple's point of view, I mean, tomorrow's earnings are going to be okay. Now, the current iPhone cycle doesn't really get impacted for this quarter. It'll be in the next one. For Apple, I think supply chain is a bigger issue at this point. And the biggest thing is, can they get the parts needed in the first 2 quarters of their fiscal year? Because we don't want to get into the next summer and we're still waiting for parts, because then people then start waiting for iPhone 14. So the next 2 quarters are very important for them in terms of those iPhone numbers. And Amazon, I think, from that point, I think the cloud numbers are going to be very strong for them.
Anurag, how much have higher taxes been priced into tech earnings? And I say this not with respect to a 23% or higher kind of rate, but an enforcement of the 15% tax rate that's being called for in Washington.
I personally don't think it makes a damn difference. I mean, the reason is because these companies are growing top line much faster than overall tech spending. And imagine, company like Microsoft, which is 1/3 of the software market, is growing at 2 times the software market at 20% right now. This is unheard of. That's, 10 times GDP or 7 times GDP. So from that point, these minor taxes don't make a damn difference to me.
Well said, Anurag Rana. Anurag, it's been too long. Don't leave it so long next time. joining us from Bloomberg Intelligence. Thank you very much, sir.
Doesn't get up before 10
Tom, these
a.m.
numbers, 30%, 40% growth in the cloud business. I think it was 44 for Google yesterday. And we're just shrugging off these numbers like we're used to it now. 30%, 40%. Unreal.
Well, they're unreal, John, but I got to go down the income statement here. And as Mr. Rana said, it's about scale. And it's not only scale at the revenue line and competing day after day, it's scale down the income statement, the operating leverage. They're like old industrial companies, and that as they build it up, it gets better and better. That's the bull case. And the gloom crew is saying at some point this ends.
And those stocks have had a great year, Tom. Both Microsoft and Alphabet, and GM too. General Motors out with some numbers this morning. Lisa, just quickly, beating a race.
Yeah.
Beating a race from GM.
And the idea here of electric vehicles and what the future holds, how much they expect to derive their revenues from that. Honestly, they want to be viewed like Tesla, because then their share price has a much higher ceiling.
Share price coming in just a little bit, down by 0.5%, was positive after the numbers. Now just a little bit negative after a pretty stellar year so far, year to date for the stock. We'll catch up with Mary Barra of GM a little bit later this morning. From New York City, alongside Tom Keene, Lisa Abramowicz and Jonathan Ferro. Your equity market down too, negative 0.04%. Yields in on 10s, yields up on 2s. That curve is flatter. Chairman Powell next Wednesday on radio, on TV. This is Bloomberg.
Don't miss out on the bigger picture here. His fundamentals are damn good.
So it's possible the growth is faster and these forwards are wrong, and therefore rates will go higher.
I think central bankers are getting a little bit concerned that labor supply is going to be tight.
Inflation is going to get worse before it gets better, but we are going to see these supply chain issues ease.
We're a very, very, very long way from stagflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television. A different hour of Bloomberg Surveillance. We will speak with the tech executive, Mari Barra, later in the hour. Steve Mnuchin coming up on John. The total chaos in Washington. There's no other way to put it.
It looks like things are coming together, Tom. Let's see if they actually push forward and get something wrapped up down in Washington. Here on Wall Street, we're looking at the earnings, Tom, for corporate America. It's been beat and raised through the morning so far from the likes of GM, McDonald's, Coca-Cola. Coca-Cola's a nice read-through on the broader economy as well. Elevated commodity prices through 2022. Got a nice read on that from them. The asynchronous global recovery. Starting to see that as a bigger feature, Tom, as some of these corporate earnings. A slowdown in China captured by McDonald's a little bit earlier.
And McDonald's with a 7% dividend increase. I thought that was of note as well. John, we've got to get to tech. Yesterday, Anurag Rana just with us, looking out to tomorrow as well. This is an historic moment for the country where tech just looms exceptionally large.
Alphabet price target shifted higher, where Tom, BMO, Jefferies, Barclays, they all followed suit. The line out of Microsoft and Satya Nadella, Tom, I thought was interesting.
Please repeat that.
Digital technology is a deflationary force in an inflationary economy. They see themselves, Tom, as part of the solution.
And Lisa, the separateness of this from a traditional back and forth in Washington is remarkable. It truly looks like global Wall Street removed from what we see in the political debate.
And frankly, removed from what we see in, frankly, a labor economy that still has some room to catch up. Yes, it's removed from the debate in terms of a lack of agreement. However, there still is this feeling that we are heading into a positive place. To go to John's point, though, about a disinflationary measure right now in an inflationary environment, what I find interesting is how much business are the big caps taking away from small caps? You were talking about this before, Tom. How much can the big techs weather the storm much better than smaller firms?
Surveillance research now extremely important to understand. Disraeli drank brandy and water, Gladstone, sherry,
You've
and
been
a
doing
beaten
some research,
egg. I did some research on this, John. Sunak, I don't believe is going to have a beverage of his choice. John, the moment for Brexit and the United Kingdom.
The Chancellor delivering the autumn statement, the autumn budget, Tom, and looking for growth next year from the Office of Budget Responsibility with a 6 handle for next year, Tom. I think that's interesting. A 6 handle in the UK next year, 4 handle in America. Even though growth could slow, Tom, globally over the next 12 months, these are still pretty decent levels.
John, let's get to the data right now before we get to the former Chancellor of the Exchequer of the United States. John, I see red and green on the screen.
I see equity futures coming in off all-time highs, Tom. That's the way to frame this. Record highs into Wednesday. Equity futures just a little softer by 1/10. Tom, yields on the long end on 10s a little bit lower, on the front end a little bit higher. That curve is flatter. Chairman Powell, Wednesday, news conference, Fed decision, then on to payrolls Friday, next Wednesday. Next week,
Right.
Tom, is the bigger week.
Whether Democrat or Republican, one thing I know for certain is later in the Trump administration, all agreed that the gentleman, the movie producer from Goldman Sachs, rose to the occasion. He is the former Chancellor of the Exchequer of the United States, and he is in Riyadh. Yusuf Gamal Eldin joins us now with a conversation with Chancellor Mnuchin. Yusuf, good morning.
Hey, Tom. I mean, for once, it's not all happening in New York. People from all around the world, CEOs and government officials, have come out here to Riyadh. And one of them, of course, is Steve Mnuchin. He's the founder of Liberty Strategic Capital. Thank you very much for joining us, Mr. Secretary. Give me a bit of an overview, then, of the kind of meetings you've been having and whether you've been able to secure any new deals.
Well, first of all, it's great to be with you, and it's great to be back in the region. My focus here is really to be supportive to the economic transformation in the region. It's very important, I think, for economic stability that all these countries transform their economies and expand them away from just energy.
You raised $2.5 billion in private equity investments. Did some of it come from the likes of the Public Investment Fund?
Well, I can't really comment on our raising of funds. What I can comment on is what we're focused in doing. So our real focus is right now on technology with a big emphasis on cybersecurity, national security, and data privacy, which was an area I focused on when I was Treasury Secretary. I was responsible for cyber for all of financial services, and it's a very big risk. So we want to make sure that companies and governments are taken care of and protected.
Let's get to the macro story for a moment, because the last time you discussed inflation, you said you were worried. Now, quite a bit more data has come through. How has that view evolved since?
Well, I was worried because I thought we'd see inflation. We have seen it. I think, we're running probably in the 4 to 5% inflation. My guess is we'll stabilize closer to 3.5%, but that's still a significant issue. For a long time, the Federal Reserve was concerned that we couldn't get inflation up to 2%. But now, just given the enormous amount of fiscal and monetary support, I am very concerned that we're going to see higher interest rates and the impact on consumers.
And then 10-year Treasury yields, those still go to 3.5, because that's what you said last time.
That's still my prediction.
Okay. What about the ability of the United States to grow itself out of pre- and post-pandemic debt and the massive amounts of money that it's borrowed?
Well, look, there's no question that during this crisis, we needed to have massive support. And I'm most proud of the fact that we passed the two CARES bills, 96-0 and 100-0 in the Senate. That was pretty extraordinary. We spent $4 trillion. I never thought I'd be saying those words, $4 trillion. I think we needed to spend that money where we would have had a global depression, not recession. But the new administration has continued to spend another $2 trillion, now more money. I'm very concerned about the size of the national debt. At $28.5 trillion today, I worry it could go up to $32 trillion on a $23 trillion economy. It's quite concerning.
I want to stay with the fiscal side of things for a moment, because the Democrat tax plan has been controversial to some. The billionaire tax, as it's also called. Do you think that it's a good plan? Will it pass Congress?
Well, let me just first say, I think now's the wrong time to raise taxes on anybody, whether it's billionaires or average consumers, and spend. I think we've done plenty of spending. I think the problem with the billionaire tax is, one, it probably won't raise much money, since a lot of this money will be given away to foundations, so it won't be taxed. The other issue is it's probably unconstitutional. And the third issue is it creates very, very bad incentives. How do you tax public securities and not private securities? Think about this. It's a complete disincentive to grow your business, to basically say every year the government will take a little bit more of your business away. That's not the right incentive for long-term investing.
A shout out to Tom Keene for this question. He is looking to find an answer on whether there's going to be an opportunity for Republicans in 2022 and 2024 to reassert a calmer policy out of the present chaos.
Out of what?
The present chaos.
Well, we'll see. It's politics. My guess is a lot of things will change over the next couple of years. Again, my biggest concern right now is we need less spending, and we need to worry about making sure we don't have inflation out of control and the national debt is sustainable.
We've seen a U.S. ban on a China telco. In many ways, one would have thought that some of the tensions between China and the United States would ease a little bit with the new administration and the new approach. Clearly, that hasn't happened as fast, or is not happening at all. Have you been surprised about how this has evolved?
Well, let me just say, Ambassador Lighthizer and I spent a lot of time going back and forth to China. I think we probably had 20 different meetings with the Vice Premier, and I think we're proud of the work we did on the Phase 1 trade agreement. My own opinion is more work needs to be done, that there should be more dialogue. As it relates to telecom, look, I think there's certain areas that are national security areas, at least as it relates to certain telecom equipment, and I'm not commenting on the specific of this. We want to make sure that our data integrity. On the other hand, these are two large economies that have to coexist, and I think the work needs to continue to be done on trade. China has always had the opportunity to have the U.S. markets open, and we need to make sure we have the same reciprocal opportunities.
We're going to have to leave it there. Thank you very much for the time. That's Steve Mnuchin. He's the founder of Liberty Strategic Capital. Tom, the rest of the team?
Yusuf, thank you, sir. Thank you very much, as always. Catching up with the former Treasury Secretary there, Stephen Mnuchin. Just on the billionaires tax, just made some notes there, Tom. One, it won't raise money since a lot of it will be given away to foundations. Two, it's unconstitutional. And three, it's very dangerous. It creates very dangerous incentives. What's the incentive to grow? Just the response to the billionaire tax proposal from the Democrats, Tom, coming from the former Republican Treasury Secretary.
Well, we're going to see. And what I would suggest, in looking at 107 pages of a proposed document, Anne-Marie Horton claiming it was released at 5 a.m. this morning, John, sometime in the vicinity of 4 p.m. this afternoon, you may actually start to see some very careful, detailed questioning about this preliminary document. I mean, we really haven't seen anything yet, even though we've got 107 pages.
You guys are way better at this than me. Lisa, you especially. It's unconstitutional. What's your response to that?
Especially given the composition of the court, the idea that if you have a sort of questionable constitutional issue and you've got a 6 conservative, 3 more liberal member of the court, the more likely chance is that it will swing against this type of tax. A lot of people saying it will not pass. Honestly, this is one of the big questions. How much is this a messaging issue versus something that actually could come to fruition?
And Lisa, the one thing we're not talking about, Tom, high corporate taxes. A minimum corporate tax maybe, but high corporate taxes were part of the outlook for so many people in this equity market on Wall Street, Tom.
And Lisa was dead on about that a few days ago. Still stunning. Sarah Malik, whether she was stunning the last time she was on, Global Equity CIO at Nuveen, too short a visit this morning. Sarah, you're looking for a catalyst. What's the next catalyst? Let's go out into 2022. What's the to-do? What's the to-be in early 2022?
I think the next catalyst is what we're challenged with right now. There's really 2 challenges for the markets. One, look at October, where market valuations have revalued upward. So we don't have that to look forward to going forward. And then earnings season has been strong. We've seen consensus beats by about a little bit more than mid-single digits. But again, what's the catalyst for this going forward? Looking at 2022, we think markets are going to become more challenged going forward. We have a couple of rate hikes priced in by the markets. The yield curve is flattening. So what we have to rely on is hard economic data. And as long as that translates to mid-single digit earnings growth, which is what we expect, that should be supportive for the markets. But given where valuations of the markets are right now, we think it's more likely the market takes a breather from here, because for the rest of 2021, drama in DC, hard to find that catalyst to take the markets higher, because we think we just saw 2 main ones this month in October.
Sarah, you are a phenomenal stock picker. As you see things right now, who's executing really, really well? Who's getting it done?
Well, we like the med tech sector here. So this is a sector that has had a lot of procedures deferred due to COVID. And now with vaccines coming into play, we think that sector really starts to ramp up. Look at a company like Zimmer. This is a company that has had negative revenue growth, down 12% in 2020. The industry should grow about 3%. They should have margin expansion now that they've incorporated manufacturing and expenses that they have to put in place because of COVID. And also the demographics of aging for this company that's in orthopedic should be positive. We talked about tech a lot this morning. We see a shift from advertising to e-commerce players. Amazon's been a laggard for a good period of this year. We think going forward, their investments in logistics should be positive for them. This is a company that could have a catch-up trade.
Sarah, how much is the larger company complex really better equipped to deal with some of the margin pressures, supply chain disruptions than small caps?
I mean, scale is an advantage for larger companies. This is just what we talked about with Amazon making these huge investments. These are companies like Nike, which should have some scale and advantages at these ports. But looking at small caps is interesting. They've been outperforming. They've been staying at about a plus or minus 10% range this year. They're at the top of that range. We think they could break out as interest rates start to increase, which is what the market's expecting. As we see inflation, normally this is good for small caps, and they can be nimble in periods such as this. So small caps are an area that we like going forward.
Sarah Malik, thank you. Joining us from Nuveen. Sarah, if you want a longer conversation, I have a show at 9 o'clock. 9 Eastern, through to 10.
Seriously?
We can talk for 45 minutes.
Thank you.
Sarah, thank you. Sarah, thank you. Sarah comes on with me now and again, Tom.
I don't.
It's great to catch up with Sarah. Does single names as well. Love that. I'm going to get in trouble with the team for that, aren't I?
Also, she's been accurate, which helps.
She has been.
Yeah.
Your 30-year, Tom, just about holding on to 2%.
I'm sorry, this is a big deal.
Just
and
about.
you got, I don't get, frankly, folks, I don't care, but John and Lisa do, and they've been way out front here on curve flattening, and it's is it? I never get it straight, John. The up and down of yields. Is this a bull or a bear flattening?
It depends, Tom,
Or is
because
it a
the front
Ferro
end's moving
flattening?
too. The front end's up by a basis point and the long end's down by 4. So I guess you can call that a bull flattener, considering it's led mostly by what's happening at the long end.
I flunked that on CFA.
Does that make sense? It's a bull flattener, Tom, with a little bit of a bearish tilt at the front end. Does that help you?
Not at all.
Not really.
No.
Tom Keene, Lisa Abramowicz, and Jonathan Ferro.
Ira Jersey's going, that's accurate.
Sound like a
Ferro
chef,
knows
a
his
recipe
stuff.
for a flatter curve.
Dash of disinflation.
Just a little bit of a dash of a rate hike at the front end, and maybe some hopes with cold water on them about the future at the long end. 30s to 2.
Have another sherry and beaten
philosopher.
egg.
Wouldn't you love that, Tom?
Oh,
wouldn't you love just an alcoholic beverage in the morning?
Well, yeah, well,
Markets and
the
booze.
Prosecco
Bonds and
theoretical.
booze. Bonds and booze works, doesn't it? We can be sponsored by Diageo or something like that.
Excuse me,
Road
Campari,
trip.
look at those earnings yesterday.
From New York City on Radio 1 TV, this is Bloomberg.
With the First Word News, I'm Laura Wright. On Capitol Hill, Democrats have unveiled 2 new taxes they hope would help pay for President Biden's social spending package. One would target billionaires' assets, or those who earned at least $100 million a year for 3 years in a row. The other is a minimum tax for corporations. It would require that companies that report more than $1 billion in profits to pay at least 15% in tax rates, even if they qualify for lots of tax breaks. China has slammed U.S. efforts to boost Taiwan's participation in United Nations organizations. Beijing says the self-ruled island has no right to join the UN a half-century after it was kicked out. Secretary of State Antony Blinken has called on other countries to join the U.S. in pushing to give Taiwan a greater role at the UN. It's another blockbuster deal involving Hertz and Tesla. Uber drivers in the US will be able to offer services with Tesla electric vehicles rented from Hertz starting next week. Meanwhile, Hertz signed up Carvana to dispose of rental cars it no longer wants. Earlier this week, Hertz ordered 100,000 cars from Tesla. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
There's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia is important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran is still there. Terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
What he had to say on China's suspected hypersonic weapons system was fascinating. General Mark Milley there, the chairman of the Joint Chiefs of Staff. More on that in just a moment. In your equity market from New York, good morning to you, Tom Keene, Lisa Abramowicz. I'm Jonathan Ferro. Equity futures unchanged on the S&P. All-time highs as we come into Wednesday. The numbers so far, so good. I'm on repeat. I keep saying that for a reason, because the numbers so far have been good. From the likes of Alphabet, Microsoft this morning, McDonald's, the likes of General Motors, Tom, Coca-Cola. Equities hanging in there. Yields lower by 3 basis points on 10s. The long end comes in just around 2% on 30s, 157 on 10s, and yields pushing 50 basis points, Tom, on 2s as we start to think a little bit more about interest rate hikes at the Federal Reserve.
Yes, we do. We welcome all of you on radio and television. Of course, we are earnings focused and really on the extraordinary performance of Technology America. We're going to continue on that. But now we sharply digress. David Rubenstein joins us, the Carlyle Group on fire with some recent interviews, of course, peer-to-peer conversations with Mr. Rubenstein. And I really want to focus on the hockey player from Belmont Hill. For those of you that aren't in the know, that is really good prep school hockey. And then on to Princeton and ROTC. David Rubenstein, the path of General Milley to the top of the Pentagon pecking order was most original, wasn't it?
It was. We've never had a person serve as chairman of the Joint Chiefs of Staff who had an undergraduate degree from an Ivy League school. He didn't expect to spend his entire career in the military, but it worked out that way. And he's from a military family, but interestingly, his father did not want him to go into the military. Yeah. His father really tried to keep him out of the military.
How is he colored and his service colored in infantry by the fact that his father truly was on the shores of Iwo Jima?
Well, his father was a real combat veteran in the South Pacific in World War II, but his father knew the horrors of military combat, and he tried to keep his son from going to West Point. He went to Princeton on a hockey scholarship, effectively a hockey scholarship, but he got into ROTC and ultimately stayed in the military. It's an unusual story, and he's obviously become one of the most visible of all the chairmen of Joint Chiefs of Staff because of things that happened during the Trump administration.
David, China was very much front and center with this interview, as it rightly should be, according to many people out there. What is the different nature of this rivalry, of this potential Cold War, given the fact that the strategic nature is that China, frankly, provides so much to the United States by way of goods?
General Milley said that the biggest security threat to this country is China. Now, historically, when I was growing up, it was Russia, and Russia is still a threat, he said, and of course there's North Korea. But in the end, China has the money and the manpower and the technology skills to really be a complete rival to us. And he was very worried about the hypersonic missile, for which there was a test not long ago. Now, we presumably are developing our own hypersonic missile. It's not been discussed publicly. But this is a missile which could launch a nuclear weapon on us without any real defense that we currently have.
So how separate are the military concerns that the United States has with respect to China from the business concerns, especially as a growing number of corporations in America are trying to increase their footprints in Beijing, in the mainland?
Well, the business community, I think, is interested in getting all those customers and developing relationships in China. But we have to be very careful in the business community because we recognize that China is now making it more difficult for American companies to invest there or operate there, certainly more difficult than it was a couple years ago. The military is more concerned about China as a threat and less interested in getting into China than making certain that China doesn't get into the United States.
David, in talking to the general and also within your own international view, one of the great missed calls that you and I and everyone else had was our dearth of intelligence on Russia when the Soviet Union collapsed. Do we actually have good intelligence on the Chinese military?
I think our intelligence is probably not as good as people would like it to be. I don't really know the intelligence community's assessment. I think our ability to know what's going on in North Korea is very, very limited. I think our ability to know what's going on in China is probably better, but not necessarily with the Chinese military, because it's difficult to infiltrate, and so you have to rely on technology and things like that, and sometimes it's hard to get technology that's going to pick up exactly what's going on in China. As you point out, we underestimated exactly some things that were happening in Russia, and we overestimated other things that were happening in Russia. And we've had a lot of technology failures in the Middle East. with our inability to know what was really going on in Iraq, for example.
And David, it's so important that Tom asked that question because it really dovetails the two issues of the business community and the military community. How do you get visibility? Well, there are people who represent the United States in some way, shape, or form on the ground there. How much is this a concern for business executives you speak with in terms of how much surveillance they're under, what type of regulation there might be from the United States government because of that suspicion that they are the node of information one way or another?
Well, the business community has been warned that as it operates in China, everything could be bugged and everything could be stolen away in terms of intellectual property. The business community is wary about dealing with things in China, but on the other hand, there's a lot of customers there and there's a lot of businesses there, so people are warned. They try to be careful, but nobody can be perfect in terms of our ability to protect certain information.
David, with your success, and I mention this, folks, because this peer-to-peer conversation occurs in front of our three most important documents at the National Archive. David, you brought the Magna Carta to America, the 1297 document itself. Tell us a little bit about that quickly. What was it like to gift to America the Magna Carta?
Well, there's 17 extant copies of the Magna Carta, 15 in British institutions, 1 in the Australian Parliament. This was the only one in private hands, and I put it there on permanent display and permanent loan. And essentially, it's a document that was a forerunner of the Declaration of Independence. So it really, in many ways, had more impact in this country than, ironically, it did in England. That's why I thought it should stay here.
Unbelievable to see that at the National Archive. And of course, folks, you can see it at the British Library. John, I know you've done that. The British Library Museum, just extraordinary.
Wonderful. Love it there. David, thank you. Thank you so much. David Rubenstein there. Catch the full interview, a fascinating interview with General Milley on the David Rubenstein Show. Peer-to-peer conversations tonight, 9 p.m. Eastern, New York time, Tom. Those comments on China, fascinating.
Stunning. And again, John, this is about intelligence. Hypersonic. Let's define that, John. This isn't Elon Musk and the rest of it. This is going at Mach 5 or 3,800 miles an hour or more. That's fast. But what's so important here, John, it's directional. That's the big difference.
Yep. Sending it into space, fly it at low orbit, Tom, hard to detect, and then you land it.
And you can land it. You can
land
move
it where
around.
you want it to hit.
That's the big difference.
And Tom, what did they say? 10 miles away from maybe where it was meant to hit?
Yeah.
I mean, 10 miles, if it's got a nuclear weapon on top of it, you've hit, haven't you?
My book of the summer, James Trevitas, 2034, touches on this.
Tom Keene, Lisa Abramowicz and Jonathan Ferro, your equity market holding on to all-time highs in the United States of America. From New York,
I need more water.
Heard on radio, seen on TV. This is Bloomberg. Live from New York City for our audience worldwide. Good morning to you, Tom Keene, Lisa Abramowicz. I'm Jonathan Ferro. Your equity market unchanged on the S&P. All-time highs coming into Wednesday. Let's get you some price action. Shaping up as follows. Yields come in a couple of basis points to 158.34. Bit of economic data to get to. I can do that in a moment. Can we just talk about Chancellor Sunak?
It's a tax cut.
Tom?
It's a tax cut, John.
I love the way they do this. You have a planned tax increase. You don't deliver it, Tom, and then you get to call it a tax cut.
Yeah.
This is what Chancellor Sunak just did with a planned increase on taxes on alcohol. Cancelled it, so cancelled the planned increase and has called it equal to a tax cut of $3 billion. And then interestingly, Tom, just on fuel taxes, fuel duties as well, done the same thing. Holding back on that, the planned rise in fuel duty cancelled too. That's where people feel it, Tom, when they fill up the tank and when they fill up the pint glass, and they're not hiking taxes on those two things.
Yeah, but am I right, John, that a tank of gas is $7 plus a gallon in the United Kingdom?
My mum told me yesterday, Tom, it was £1.50 a litre where she went to. So you're through $7 a gallon now. Through $7 a gallon. And I believe fuel duty is something close to 60 pence a litre.
Well, we've never had a planned tax increase that was pulled back. Lisa, we just got that on the corporate tax, didn't we?
Yeah, basically, we might get a tax hike.
It's going to go up.
Now we're not, so people buy stops.
Let's do this, John. Let's look at this economic data before we get to the lovely Diane Swank. John, I'm looking at it pretty simply as a bit of revision and a little bit of tepidness, but There we are. I mean, it's just more data that will filter into our GDP estimates through durable goods and through the inventory dynamics.
Durable goods better than expected, Tom. They were expected to be a whole lot lighter, just a little bit softer. Capital goods, pretty decent upside surprise there. Data's doing okay, TK.
Yeah, the one data line I'd look at, let's go right to that with Diane Swank of Grant Thornton. We are looking at advanced goods trade balances that we've never imagined. We are out to a negative $96 billion statistic, which I would respectively suggest Diane Swank or myself have never framed. Let's begin there. She is with Grant Thornton. Diane, we have not talked about net exports, imports, but we have a goods trade balance unimaginable. What does that signal?
Well, it's really strong demand in the United States relative to the rest of the world. That's just where we're at. And I think one of the interesting things is, of course, that will subtract from growth in the third quarter, even as durable goods add to growth. And our investment that we're seeing out there is really the strongest in technology, intellectual property that we've seen since the 1940s. So we'll get some productivity growth, but it really is going to be the weakest growth of the quarter, which we'll get out tomorrow, will be the third quarter, the weakest growth since the onset of the pandemic recovery. But of course, we're now starting to gain more traction again as the Delta wave fades. And we're seeing that already in some of the credit card data coming in for the month of October. And as we go into November, of course, the biggest constraint we're going to face out there is shortages and price hikes.
Rebecca Pattison was on earlier, and she would demand that we ask the economist Diane Swank, are we in a demand shock or a supply shock? Rebecca Pattison of Bridgewater says this is a demand shock.
It's all of the above. I mean, there's no question there's a demand shock out there, and we've juiced that demand shock with the last round of stimulus checks. We've got a lot of excess savings that's being drained down. Much depends on how much we get the private sector to pick up the baton from the federal government as we get into the fourth quarter and into 2022 and see job gains pick up again after the Delta wave. I think that's going to happen. And that is hard for the Fed because even as year-on-year comparisons get to be more difficult, which means the inflation numbers should taper off a bit in 2022. I think they're going to be residually higher than the Fed is going to be comfortable with. And they're going to be in the tough position of determining whether or not the inflation that we're enduring in 2022 is, in fact, going to be more interactive, get into the economy more. And I think that's something that they're going to have to act on. And my concern is that we do see companies out there doubling up on inventories, doubling up on orders to hedge against what are these supply chain shocks. But that won't abate inflation until we get well into 2023. And that's just too long for the Fed to wait.
Diane, let's get into the politics of the economics, because that's where it's going in Washington, D.C. The idea of the demand side shock versus the supply side shock is frankly squarely in the Republican talking points, where they're saying it is because we passed these bills earlier in the year and last year that basically gave people checks that we're seeing the demand shock that we are seeing. How much is that really the issue versus just the difficulties in turning off an entire economy, turning it back on and expecting it to happen without friction?
Well, I think, it really is. This is, friction upon reentry, as I call it, as the spaceship comes back in and you hope it doesn't burn up and the heat shields hold. It really is a lot of frictions in the labor market. We've seen that. I think we're going to see more workers come back into the labor force in the fourth quarter. But the bottom line is you can't expect to turn off a global economy and then just ramp it back up overnight. And in fact, many producers expected when we turned the lights off back in March of 2020, in the U.S. at least, some countries before that it would take quite a while for us to ramp back up. And because we supported spending as we needed to, as we paid people to go home from work, that ended up creating a very unusual dynamic out there. And it's just not to be surprised that we're going through this. That said, it's really hard to disentangle the politics from the economics. Economics are really all of the above. We are having a demand shock because consumers couldn't spend on certain things, and then when they can, they're all trying to run through the door at the same time. You see surge pricing on hotels and airfares the minute consumers come back. We've had a lot of disruptions out there in addition to climate change and extreme weather events. Everyone forgets Hurricane Ida exacerbated the rise in prices at the pump in October.
And adding to all of this confusion, Diane, you're talking about friction upon re-entry. When do we know that we've entered, right? When do we know? What signals, economic signals, do you look at to know that we have reached some sort of new normal rather than just the waiting period for everything to equalize?
Well, that's the $1 million or billion trillion dollar question. We have to keep going up on our numbers. I think quadrillion is the next one after this one. I actually had to look it up. But there's no question that what we're looking for is some kind of a sort of stabilizing in underlying inflation pressures, not as broad-based inflation increases. I think one of the things we're going to have to be dealing with in 2022 is the lags on shelter, and that could add 0.5% to underlying inflation measures alone. So even as some of the energy price and the surge pricing that we're seeing right now, as we get that friction going and the real heat that singes, that will cool down, but not enough to sort of leave the Fed on the sidelines. I really don't think we're going to see anything about what this economy really is like outside of a pandemic and into an endemic until we get into 2023. Because we're talking about not even being able to vaccinate the world, which is key here, until well into 2022.
Diane, what is so important here, and you've really had truly national leadership on this, is don't forget the third coast. It's all about the East Coast, the West Coast, and there's one big flyover, including, frankly, O'Hare and Chicago. Diane Swonk, that's a bunch of baloney. What is the tech revolution right now in the third coast of America, away from Amazon, away from Microsoft? What's a tech revolution look across the 4 time zones?
Actually, we are seeing a major tech spread out across the country, and this is really interesting to see what's going on. You're seeing tech hubs in places like Boise, really unusual places to see it, Charlotte, Austin, obviously, but we also have some in Chicago. It's really been stunning to see what's going on here and where the real high-end building and high-end housing is going up and high-end construction for office space is tech-related. And so what you're seeing is some of that tech being spread across the nation, and what we've really seen is the pandemic accelerate the digitization of the U.S. economy. You're seeing that in the car industry, the electric cars coming out, not just from Tesla, but also from the traditional automakers with a lot more options out there. This movement is on. In fact, they're worried about how they're going to get dealers to sell electric vehicles. Well, it's not part of the model. The bottom line is demand is driving some of the movement on electric vehicles, and dealers' models are being outdated as we've moved to now buy online, even cars and homes. It really is a different world. Of course, that digitization also creates big gaps and inequalities. People who are trying to apply for jobs aren't used to being able to apply, having to apply totally online, which is where all the jobs are listed now, and they're in broadband dead zones. We really need to expand broadband to be able to increase the access of those people who need jobs and better match them up to where people who don't have, to people who are looking for workers. That's difficult as well, both in urban and rural areas. So this really is a massive change that the pandemic accelerated, and I think it will deliver a lot of productivity growth. The problem is it's not evenly distributed.
The brilliant Diane Swonk of Grant Thornton. Diane, looking forward to catching up again next week, hopefully, around that Fed decision. Diane, thank you. Let's talk about a stock we will never talk about again on this programme. Let's talk about a brewer in the UK, Tom, called Marston's. I used to love Budget Day in the UK because you get these kind of moves. The stock is up by about 3-4%. The pubs are rallying in London, Tom, because Chancellor Sunak is not going through with this planned hike on alcohol duties. There's also going to be a discount on business rates for retail, hospitality and leisure sectors as well. Just a little bit of a lift, Tom, for the pubs in the UK from the Chancellor. The Chancellor now knows how to speak to the heart of the British people sometimes, Tom.
I mean, and what's interesting, Aaron, John, I think a lot of Americans, including me, are ignorant about this. This is Carlsberg Marston's, like a beer company, and I think Copenhagen owns a lot of different bars in the United Kingdom, right?
This is the independent brewer Marston's, though, Tom.
Okay.
A little bit nuanced, I know. We don't have to get into the details of it. I think, Tom, when the stock is up, when the pubs are rallying, the mood of the country's better. I think there's probably a strong correlation there. You could plot that on a chart one day and bring some technical analysis to us on it. I'd enjoy that.
How come you can drink outside in the United Kingdom on a sidewalk?
Can you not drink outside here?
No, you can.
I say, John,
you're probably doing that. Good morning, Mayor de Blasio.
How to sell the story of the United Kingdom to Tom Keene.
Yeah, Tom
Here
loves
you go.
Tom loves it in the city, Tom. Thursday evening. we going to go to London before we go to Davos? Have we confirmed that yet?
The desk patrol is out looking for a desk.
Out looking for a desk.
Yeah.
That's the only reason you won't come.
No, I don't know.
Yeah,
I just
otherwise
think it looked good, you know.
Okay.
You take a Greyhound.
We'll work on it. What, to London, Lisa?
I'm just kidding.
Tom Keene, Lisa Abramowicz and Jonathan Ferro. Kathy Jones coming up at 9 a.m. Eastern Time. Before we get there, Mary Barra of GM, after some decent numbers from General Motors and a really sizable gain in the stock this year. Heard on radio, seen on TV. This is Bloomberg.
With the First Word News, I'm Laura Wright. Well, while in London, we may be rushing to the pubs after work, as John was saying. In the United States, Democrats are trying a new and risky approach to taxation to help pay for President Biden's social agenda. They're proposing a tax that would affect about 700 people, those with at least $1 billion in assets, and those who earn at least $100 million 3 years in a row. Meanwhile, a separate tax would require companies that report more than $1 billion in profits to pay at least a 15% tax rate. President Biden is zeroing in on whether to renominate Jerome Powell for another term as chair of the Federal Reserve. The president has started to meet with top White House and Treasury aides to review candidates. He hasn't settled on a choice, and it's unclear whether he's leaning toward reappointing Powell or replacing him. China's President Xi Jinping is calling for breaking new ground in weapons development. Xi told a military conference that China must establish a modern management system for the defense industry. That comes at a time when both the US and China are rebalancing their forces for what the Biden administration has called strategic competition. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Good morning, everyone. Bloomberg surveillance, Lisa Abramowicz, John Ferro, and Tom Keene. Always an important point in earnings season to find out what industrial America is doing, and what is so advantageous here is David Weston and I. We didn't look at the first generation Corvette. We looked at the second generation Corvette and said someday we'll own one of those. And there's a new one.
I have a 62.
You have
I have a 62.
I knew that.
You know, that's how I'm sitting at home. Thank you so much to Tom Keene. We're delighted to be joined right now by General Motors Chair and CEO Mary Barra. They had their third quarter earnings out today. Mary, thank you for joining us. First of all, congratulations. You did a lot better than most people thought you'd do. I don't want to take anything away from that, but can you give us some sense of how much of that's core operations, how much that's some financing because of some used car sales that really were on a tear, and also some reimbursement for that Bolt recall?
Well, I think it was all of those things. I mean, GMF has performed very strongly. We also saw, you know, in light of the current environment, our China equity earnings were strong. But I think what the real story is how well we perform from trucks and full-size SUVs. We're selling every vehicle we can make, and I think that along with you know, the overall environment is what allowed us to have a beat for the quarter. And, you know, I think it shows the strength of our underlying business. So I'm really proud of the team and everything that they accomplished.
So the magic words there for me were every one you can make, because you can't necessarily make all the ones you'd like because of those supply chain problems. We've talked about it before. I know that it's continuing into next year. I guess my key question for you, Mary, is there anything at this point that can be done to speed up the time that you can get the microchips that you need?
Well, you know, we're seeing improvements in fourth quarter. We had indicated that Q3 would be the toughest for us, and then it was further impacted by COVID. But we're seeing stronger performance now. We'll have a Q1 will be better than Q4. It will linger into next year, and we're right now our feeling is we'll be in a much better shape in the second half of 2022. And we're also taking steps over the medium term to make sure we're never seeing this kind of constraint, not only with chips, but with other, you know, whether it's critical materials or just the overall supply chain, because we have an aggressive growth strategy in front of us, and we're going to make sure that we can execute it. So it's a near-term problem that we'll work through.
In the meantime, Mary, are there places you can save some costs? Let me give you one example: advertising. If you can't sell as many vehicles, maybe you don't need to advertise as much.
Well, Dave, it's a great point. We are saving across the board. We're seeing a strong pricing environment. Obviously, we're adjusting what we're doing to match, the fact that we're selling every vehicle that we can. But also through COVID and through this crisis with semiconductors, we have found ways to make the business more efficient. We're working with our dealers to drive an increase in profitability for them, as well as improving our costs. And so across the board, we are always driving efficiencies, and that's an underlying strength of our organization, and that supports the strong earnings.
Mary, let's talk about the perhaps longer term, and that's electric vehicles, something you've really embraced. You have some very aggressive goals for General Motors going out electric vehicles. We had some big news this week from a rival, starts with a T, won't necessarily name it, with some big fleet sales, particularly to Hertz. I know in the past you've been, I think, a little dubious about fleet sales because the margins get down. Where are you on fleet sales for electric vehicles? Are they different because you really want to get broad acceptance? Are you looking at fleet sales for electric vehicles?
Well, if you look at BrightDrop, the commercial fleet and what we can do from a light commercial vehicle perspective with BrightDrop and the whole ecosystem that we'll support, I think is a huge opportunity. And that's some of the most profitable of fleet sales. We're looking at many different opportunities because with electric vehicles, you can really kind of reframe how the sales will be. And so we're looking at a number of opportunities, but I think, what we've announced is around BrightDrop. I'm very excited about that because that's just pure growth for us.
But as I understand it, we shouldn't rule out the possibility that down the road General Motors might have a deal similar to the Hertz deal.
Well, in the past, we have limited rental cars because that generally was the least profitable type of fleet sales. As we reimagine how the business will look, we're not ruling anything out.
Okay, and finally, Mary, we've talked a lot about back to the office. Since we talked last, there have been more and more vaccine mandates. Is that affecting General Motors operations? Do you anticipate it will?
I don't think it will. We'll work. We continue to encourage our employees to get the vaccine. We continue to provide them the information, from CDC and other like organizations around the globe. And we're going to work to understand how to implement the executive order from the president, but to do so in a way that our employees and our unions agree to. So once we know the details, we'll work the execution plan. But I don't foresee it being an issue for General Motors as we look at our overall labor availability.
You do have, obviously, a very important relationship with the UAW-CIO. As you talk with them, do you see resistance coming from the union side to vaccine mandates?
Well, I think that's a better question to ask the UAW. We're just working with them to provide information and encourage all of our employees to make the decision with the right information. And that's what we'll continue to do. And then, again, we'll look at what the specifics are of the mandate and figure out how to implement.
At this point, we don't know where we are in the pandemic, but it seems like it's getting better again in the United States. Is it affecting GM operations either on the sales side or in the production side?
Actually, we're the biggest impact that's gating us right now, as we talked about, is semiconductors. But we've seen recovery from the impact in Q3 from some of our supply base that caused a little bit deeper impact. So I'm optimistic that we are through the worst of it. We've shared our safety protocols with our supply base around the world. So that's what gives me confidence that we're going to see a stronger Q4 and then a stronger Q1 and even as we get to the second half of next year, continued improvement.
As you have that gating function, as you refer to it, Mary, with the semiconductors, are you seeing inflation either in the cost you're paying for inputs or costs you can pass along to consumers?
Well, we definitely are seeing commodity prices increasing, as well as the cost of logistics, which I think is, impacting almost every industry. We're working and managing that right now. And again, because our product portfolio is so strong, I really believe it's the strongest cars, trucks, and crossovers we've had in my 40-year career here at General Motors. And that's what is allowing us to also have very strong pricing, and because we have strong receptivity from the customers.
Okay, Mary, really appreciate you spending time with us today. That's Mary Barra. She's the General Motors Chair and CEO.
David, thanks so much. I don't care. What I know, David, is 1962 is a Corvette that changed everything, the wedge tail, and then it's got the little side cove things, right?
Yeah, it does have side coves, exactly right. It's a year before the Stingray. 63 was the Stingray, and
Yeah.
I like it because it's the last one. I also like it because of Route 66 and George Harris. If
but
you
it's
remember
like
that,
it's
back
like
that
the
far.
romance one.
Yeah, for me, that's bright red, red on red. The
And
only kind.
you tool this thing around like it's out on
Every
the roads?
weekend.
Every weekend.
Yeah,
out?
it's a simple General Motors car with a 327 cubic inch engine. I love it.
Guys, did I do that okay? I mean, I was trying to channel my inner Matt Miller. Did I do okay? I hope so. David Weston, thank you so much. On Corvettes and the engineer from Detroit. Lisa, what an interesting setup we've got on earnings to tomorrow's tech earnings.
And frankly, General Motors in that interview with Mary Barra shows how high the bar is. They actually delivered a beat. They raised their forecast. Shares down more than 3% because people were not satisfied with the quality of why they beat.
And identifying some of the risks forward on EV. Please stay with us through the day. The battle in Washington will be addressed at 12 noon. This is Bloomberg. Good morning.